Okay, good morning, everyone from Bruce Property Limited. Welcome to this one-day workshop on how we could make use of dynamic Excel modeling to prepare financial statements. And this will be done in line with our understanding of IFRS, especially with reference to conceptual framework and IS1. And this section will be interactive as far as practicable, and we need to all get involved and participate. And we need to bring this section to a granular level where we have better appreciation and understanding of what is expected of us. And the beauty of this is that upon completion of this workshop, we'll be able to confidently develop the skill to producing financial statement on a click of a button in less than a few seconds. And we are going to demonstrate that from the scratch to the end point. And if there are any questions, contributions, perspectives, we need to share it among ourselves and make it something that is fruitful and valuable to us all. Once again, I'm Olumiwa Adebayo, the Chief Possibility Officer for Economics, Green Finance Professional Services Limited, the professional firm that is spearheading this session for you. Okay, today is 29th of December 2020, and this is more or less a comfortable time for us since we are relaxed towards the end of the year in order to refresh ourselves and acquire knowledge required to move on to the next level. 2021 will surely be a glorious year for us all. Amen. Now let's go back to underlining principles. Now, one thing I want us to understand is this. Applications, Excels, these are tools that serve as aid, but they are not expected to replace the human faculty and thinking and reasoning of we professional accountants, because we are the ones to set the tone with respect to how financial reporting should be. And therefore, we should not have it at the back of our mind that these tools will totally replace our function. No. These tools will only complement our functions. The only time it's going to replace our function is to replace anything that is considered a daunting task or a routine. And that's why you have the robotic process automation system going around the world today. So that machine is to be designed to do things that are required on a repetitive basis. But machine will not be able to reason behaviorally for us as professionals in decision making. That's why we said that no matter how robust an automation system is, we professionals are to set the tones, we are to set the command, we are to set the rules, we are to give the principles that the machine will learn from and be able to replicate on our behalf. We then speak to the fact that we can't do without having the basic understanding of the underlying principles with respect to financial reporting. That is our background. And that is why at every point in time, we are to more or less equip ourselves with this understanding. And that's why today I'll start by introducing, or let me say reintroducing, what we already know or expected of us to know with respect to IS1. IS1 deals with the general purpose financial statements, how this is to be presented to the general public so that it reaches all stakeholders. And this is quite different from management reports, which more or less is tailored towards specific needs and requirements of the executive management and the board of an organization. Okay, but the knowledge in this can equally be harnessed in developing management reports and accounts. And that's why we need to keep abreast of it. Now, what are the key principles in IS1? The first one is that when you go back to your understanding of IS1, it tends to set minimum lines of items that should be contained in an account. And that is why you find out that when you pick financial statement of entities across industries, with little differences, you find out that they are more or less the same. What may vary from time to time are disclosure of information that are specific to those entities, and likewise to the numbers of those entities. But in terms of structure, layout, presentation, they remain the same. Why? Because it is standardized. It is standardized based on the requirement of IS1. And again, when you go back to the conceptual framework, what constitutes our financial statements are items of statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows, and also note to the financial statements. All these are reiterated by the requirement of IS1 for us to have better appreciation. And these are what we are likely going to more or less develop a system for in order to continuously prepare account in a manner that depicts or represents what it's supposed to be. Also, except we are presenting our account in order of liquidity, which is common to financial service industry, you are expected to group your assets and liabilities based on order of permanence and classify into non-current and current items respectively. And our understanding again is that non-current items are assets or liabilities of which the benefit or settlement are expected to span for more than one accounting year, or simply put, more than 12 months, or an operating cycle, as the case may be. Whereas any asset or liabilities which the benefit or settlement is required within 1 year, or within 12 months, or within an operating cycle will be classified as current. If you also have the understanding, you find out that there are some times where a single item might surface in both current and non-current. And such item implies that it has a current portion which is immediately due in 12 months, while it has non-current portion which are other portion of it that will not be due until after more than 12 months. That is also an understanding we need to take note. Another thing we need to take note is the materiality in terms of classification or grouping of items in the financial statement. Though IS1 has defined various classes of items in the financial statements, okay? And I'm going to more or less display that and show you from my subscription to IFRS Foundation resource material, where you find out that there are items that are already classified or pre-classified for entities. Items such as property, plant, and equipment, items such as inventory, intangible assets, financial assets, and etc. But again, the standard makes us understand that based on your uniqueness, there might be need to have a separate class for an item once you consider it unique and material. And once you consider it that it will be better understood and appreciated by stakeholders if they are shown separately. In that light, you are required to also show that as a separate class of item. Okay, but one thing you need to take note is that consistency is the order of the day. Once you have chosen such a route, you're expected to continuously apply such so that it doesn't distort the flow of the financial statement. As you have said also, One thing that is most important in every financial statement produced is that it must demonstrate certain qualities. And the most fundamental quality is that it must fairly represent what it is, so that it can stand test of time and be reliable for decision making. And what must be fair about the financial statements includes your financial position, your financial performance, and of your cash flows at every point in time. Now, but there's an exception, but this exception is, I could say, is about 0.1% at any point in time before you could come across it. That's why it is extremely rare. It is rare such that there might be need to deviate from the requirement of IFRS in your presentation of financial statements. But this instance must be justified and must be separately identified. Okay, but it's very, very rare to have such situations. Okay, such situations might entail situations where there are no specific guidance to certain things that are unique to you, especially based on jurisdictions. And therefore, that might make you slightly want to deviate from that requirement. But this is very rare because the IASB and the IFRS Interpretation Committee are working assiduously to ensure that every aspect that requires urgent attention in terms of guidance, in terms of recognition, measurement, and disclosure are quickly addressed, at least by way of interpretation guidelines. Okay, and lastly, on this, we also need to understand that in preparing financial statements, as I've said earlier, robotics cannot replace human being when it comes to basis of judgment, basis of estimation, and sometimes when we are making assumptions. And that needs to be taken into consideration. That is where our work lies, because behaviorally we understand what goes on within our business environment. We understand what goes on within our internal and external environment. And in that case, we are in a better position and in an advisory capacity to more or less make recommendations about certain judgments that have to be taken by the board of the company. And likewise, estimations and assumptions that will underline the preparation of the financial statements. And again, we must keep abreast of the fact that financial statements we are talking about here are those that are prepared on the basis of a going concern business. And that is very key to our assumption here. Otherwise, if the business itself is considered not to be a going concern, there will be need to deviate from the fundamental principles as contained in IAS 1. And therefore, we can resort to using other methodologies. The most common of other methodologies is what we call the breakup value basis, or what we call the for sale value basis. Okay, and that speaks to our position there. As I said earlier, in line with the conceptual framework and in continuation with the requirement of IAS 1, what does a financial statement contain? Financial statements contain the following: statement of financial position. As we all know, that will produce a statement that shows all of our assets, our liabilities, and of our equity. Likewise, we have the statement of profit or loss and other comprehensive income. I do consider these two-in-one statements. Two-in-one statement for those that have, in addition to their financial performance, activities that more or less are reported through other comprehensive income. And these two constitute this statement. This third statement there is a statement of changes in equity. Statement of changes in equity is what reconciles our equity position between last year and this year. And the essence is to say that equity is not remeasured. As we all know that equity is only measured once in its lifetime. Subsequently, equity is measured as the residual, which means after deducting all of your liabilities, what is left of your assets is your equity. Okay, and in that case, we are also aware that equity has its own components. components that are statutory in nature, such as share capital, share premium, and any other capital reserves, and equity that are more or less revenue or income or loss any in nature, which are arising from activities of the business over time, such as retained earnings and other components of equity. As you are aware, other components of equity could comprise fair value reserve, could comprise actual gain or loss reserve, could include cash flow hedge reserve, could include foreign currency reserve, and etc. that are as a result of requirements that bypasses the profit or loss. And these are examples of other components of equity that we need to take into consideration. Okay, the first statement is a statement of cash flows. As we all know, this is the only exception to the general rule of accounting. Remember, the general principle of accounting is accrual basis. Okay, but the exception to that is the statement of cash flow that only consider the actual impact of cash movements in and out of the organization as a measurement of performance, other than accrual accounting. And on this, we also take into consideration that based on the requirement of IS 7, we have three cardinal activities that are involved in every business. Okay, we have the core activity, which is the operating activity, which speaks to the life of the business. That is where the business is expected to primarily generate its cash flows and also consume its cash flows. Second activity is investing, which is a supporting activity to the core activity, where all material or equipment you are going to use and supporting investment that you are going to use to support the operation and production of the business is more or less considered within that activity. And finally, the last activity is a financing activity. It's also critical to the business because that is where the source of finances of the business will come from. Source of finances that support the operation and also principally support the investment. And these are the activities that we need to take into consideration. And the beauty of this is that it shows us all of the inflows and outflows that impact various activity, and that can be used as a key performance indicator in measuring our performance as an organization. And lastly, we have notes to the financial statements. Note to the financial statement is an integral part of the financial statement. As you all know, by the requirement of IAS 1, and likewise by the requirement of the conceptual framework, none of these statements has priority over the other, which means there's no order of importance. Rather, they are of equal prominence. And what this simply speaks to is the fact that they must rank them as important as possible on an equal basis. Now, the notes to the financial statements is the substantial part of the financial statement that contains a lot of information that makes other stakeholders other than the management to keep abreast of activities of the company and better have appreciation of the activities and operation and performance of the entity for a given period. Now, the information is itemized and broken down into various sections, as you can see there. The first one here is that you provide the general information about the reporting entity. Which entity are we talking about? It is very critical and most important. Are you talking about a single entity? Are you talking about a group of entities? Are you talking about entity in a particular sector? Are you talking about a merchandising entity? What is the nature of that entity? What is the name of the entity? What is the legal status of the entity? And some other ancillary information that will make us have better understanding about the entity we are talking about. Another aspect is the statement of compliance with IFRS. It's critical for you to understand that at every point in time, for any financial statement to be considered rightly or wrongly to be an IFRS financial statement, such statement must contain explicitly statement of compliance. And we are going to see that from our practical display of our session. Other aspect is that you must demonstrate and show us the basis to which you prepare the financial statements. And that's why we've said that our historical cost convention, subject to certain adjustments with respect to fair value, is critical for our understanding. And likewise, emphasizing that accurate base of accounting is also critical in our basis of recognition and measurement. Okay, likewise, we have significant accounting policies. Accounting policies are drivers of accounting recognition, measurement, and even disclosure. And therefore, it is critical for every organization to have clearly spelled out and detailed accounting policy that is approved by the board of the entity. Okay, and likewise, we talk about critical assumptions, estimation, and judgments that are made by management must be disclosed. Explanatory notes and relevant disclosures are also key. When you talk about revenue, revenue is just a line item, but we need to have better understanding of your revenue. Where are your revenue coming from in terms of product line, in terms of geographical distribution, and some other things? We need to have better appreciation of that. And that's why explanatory notes will break down most of those things into various detailed items. Also, we have information about financial risk management. Also, and that speaks much more to financial instrument disclosure as required by IFRS 7. And that also we'll see. And lastly, we have capital management disclosure. Okay, but these are financial statements in line with IFRS. But in Nigeria, in line with CAMA, okay, what we present goes beyond financial statement. Likewise, in other jurisdictions, what we present or we're expected to present is not just financial statement, but what we call annual reports and accounts. And what is annual report and account? Annual report and account contains financial statement plus all other statutory requirements and information that is required of you to be disclosed. Okay, we must not miss out that. But financial statement only contains these 5 statements. Okay, any other thing outside this are not considered element of IFRS financial statement, but they are considered other statutory requirements that are to be disclosed in line with the company's acts of various jurisdictions. We need to take note of that. Okay, and that speaks to our understanding of the background. Now, to further demonstrate our understanding, I try to also present to us edifice of a typical financial statement. How does it look like? Now, you better have appreciation of what you want to do if you understand the output you desire, which means if you understand the end from the beginning, you have better appreciation of how you move on that light. And that's why here I try to reiterate all what we have discussed to show you in a pictorial manner what our IFRS financial statement needs to look like. Our balance sheet, as we said earlier, have to be grouped into current and non-current. And you can find out here that there are some items that are surfacing in both. It's because those items by their nature have current portion and non-current portion. Okay, that is for our assets. Likewise, we have for our liabilities. Equity is equity. Equity is not considered as current or non-current because it's a residual. Rather, what is considered as current and non-current are assets and liabilities. And we can also see in our liabilities that we have some items that surface at both legs. And these items are because they have current portion and non-current portion. Okay, all things being equal, our total of equity and liabilities supposed to support our total assets for us to depict the appropriate financial position of the entity. Now, for our comprehensive income statement, or what we know as a statement of profit or loss and other comprehensive income, we also have this to display. Although, remember that we have 2 order of presentation for our income statement, whether by function or by nature. But mostly, in this part of the world, except for some businesses, they present theirs in the order of function. And function means that you are presenting it with respect to revenue, cost of sales, and every other functional organ or functional organic functions of your business. And that is where you can see a pattern like this. Now, let me quickly display that of Nest and display it side by side with that of MTN. Okay, I believe we can also see this. Okay, this also speaks to the order of function. Okay, functional analysis. Let's look at MTN. Now, apart from the fact that MTN presents both group and company, let's leave the group. Let's focus on the company. Now, you find out that MTN order is, by their nature of engagement, they present themselves by nature. Okay, nature means that rather than show it by functionality of the business, you show it by the nature of the expenses, like the grouping of expenses. Is it salaries and wages? Is it more or less subscription expense, commission line, regulatory payment, depreciation, impairment, and etc. like that? Okay, which means they group it based on P&L lines rather than the functionality of the business. Okay, the difference is that nature goes granular, while function is more or less condensed. But to appreciate function at granular level, when you go to the note, it can now be further broken down. But again, regardless of it, any methodology you choose, you must follow it consistently. That is a requirement of IS1. Now let's come back. Okay. Now, as I've said earlier, we have other comprehensive income. I told you this is like a two statement in one. The first statement stopped at profit for the year or loss for the year. The second one more or less deals with other items that bypasses your profit or loss. And such items are items arising from actuarial gain or loss, which is in line with IAS 19, items that borders on foreign currency, translation for non-monetary items in line with IAS 21, items that more or less are fair value adjustments arising from financial instrument measurement for those that are measured at fair value to other comprehensive income, that is IFRS 9, such as share-based payment reserve, that is IFRS 2, and such as voluntary accounting for hedges, that is IFRS 9 also. And when you also have revaluation gains from revaluing items of PPE or intangibles, as the case may be, which passes to, that's IAS 16 and 38. And these are items that you're expected to see within other comprehensive income. As you all know, you have to report those items net of their taxes, which means your income tax in your profit or loss are solely income tax that are attributed to items that are reflected through profit or loss, while every other component of income tax not attributed to profit or loss or to equity will have to be recognized through other comprehensive income, which then means that when you are setting up your accounting system, once you are exposed to all these items within other comprehensive income, you must also ensure you set up the tax implication as a line item in order to clearly separate it from taxes that are reported through profit or loss. The next item is the item of statement of changes in equity. Okay, what this speaks to is the fact that your equity is your residual, is your net assets. Now, the difference between your equity as at end of last year and end of this year have to be reconciled. There are two ways of reconciliation. First, equity has to be broken down to its individual components. Second, equity has to be reconciled by showing items that impact equity in terms of movement from the beginning to the end of the year by each line item we have broken equity into. And that is what this speaks to. And there are about 3 sections in equity, in statement of changes equity. The first section speaks to the fact of where there's a possibility of an adjustment to your, what's it called, equity brought forward, especially where there's a change in accounting policy and there's an adjustment affecting that, or where there's a correction of errors and there's a prior year adjustment. Those are the things that affect. And that's why you find out that your balance sheet as at the end of last year was adjusted with the impact of changes in policy before you have your restated balance sheet. Okay, the second level there is the level where you show your items of profit or loss separately from your items of other comprehensive income. Okay, and this more or less will be aggregated to impact your statement of profit or loss, your statement of changes in equity. The last section of it is the section we consider transaction with owners of equity. Transaction with what? Owners of equity, or transaction within equity. And what this speaks to is that there are some transactions at the end of the day that affect your equity, but did not affect your profit or loss, nor pass through your profit or loss, did not affect your other comprehensive income, nor passes through your other comprehensive income, but affects your equity directly. Example of them are like when you pay dividend, when the additional capital issued, when you repurchase your shares, when you have other items that directly impact equity, like you issue bonus, which means a classification from from retained earnings to bonus and etc. All of these are items that comes under that third category, which you need to take note of. And also we talk about the statement of changes in statement of cash flows. Now, the statement of cash flows, as we have identified, we've said it has 3 activities. The core activity, the most important activity, is the operating activity that speaks to your day-to-day management of your operation vis-a-vis your working capital. And this is also going to be presented in 2 orders. There's order which we call the indirect method, which is what this order has taken care of, which means reconciling your profit to your cash flow from operation. And there's another order we call the direct method, which means that instead of looking at functionality, you rather look at nature of your cash flows. Now, such as if you pay salaries, you purchase materials, you pay vendors, you collect cash from customers, you pay administrative expenses, you pay taxes, and etc. Okay, but let me also check whether in which order did MTN present its statement of cash flows. Now, okay, we'll go to note 39. Note 39, you know, they condense it here. Note 39 will review that to us. Now, note 39, this is order, it is a direct method. Do you all agree? That is a direct method? Do you all agree that this is a direct method? I can't hear our voice. Can we unmute? Do we agree that it's a direct method?
Yes.
Yes, yes. We are on mute before, sorry.
Okay, now let's look at Nestle. Unless you also use indirect method. Okay, okay, but there's entities that use direct method, but they are rare in. Okay, yeah. What method do you guys use?
Sorry. Permit me to tell you that the screen is still showing introduction to IFRS financial statement overview.
Sorry, I didn't switch it. Yeah, sorry. Thank you. Now I'm using multiple systems. I have to switch. Okay. This is MTN that I said earlier. MTN uses indirect method. And likewise, Nestle, they both agree they used indirect method. Which method do you guys use in Bro Property Limited? Which method do you use?
Well, basically for Bro, you see, we prepare management accounts purely. It's our consultants who present our FS, and I think for all the sites or places we manage, it's basically PwC. So okay. Yes, it's not like we prepare FS as accountants.
Even if they prepare, but which of the methodologies have they been using?
Let me just check my last FS and get back to you.
Okay. Thank you very much, sir. Okay, let me switch back. Okay. Likewise, our investing activities and our financing activities. Now, again, as we have all seen, that our introduction to financial statement also reviewed that the note contains things like this. I found out that I've developed one template here, primarily for our discussion here, which I will also demonstrate after presenting this slide. We have reporting entity. You state the name of the company, the nature, which country, and all sorts of things. Is it a group of companies? Does it have subsidiary? What does it do as a business, which is its primary function? What is the basis of accounting? You can see the statement of compliance. What is the basis of your measurement, historical costs, subject to adjustments for fair value of these items? What is your functional currency, and etc. All of these are critical to it. And you must take into consideration all of these items in your financial statement presentation. One, going concern nature, accurate basis of measurement, consistency, materiality and aggregation of your items, offsetting rules. Now, offsetting rules means that you are not permitted to offset assets and liabilities on a line-by-line basis, no. It's only in a rare situation you can offset if certain conditions are met. What are the conditions? One is that before you can offset liability with an asset, there must be legally enforceable rights. Secondly, even when there's a legally enforceable right, for you to be able to offset, it must be set up such that the asset is created solely for the settlement of that liability. And I'll give you a practical example. A practical example is retirement benefit obligation. Okay, if you have understanding of IS 19, where you talk about post-employment benefits, whether as a defined benefit or defined contribution plan, you find out that as a defined benefit plan, you have what we call the plan asset on one side, which means the funding of that plan obligation, which is like the gratuity and etc. Now, the asset that was created is not asset of the company, even though it is managed by the company through its managers. Okay, and therefore that asset is created solely for the payment of pension or gratuity upon retirement of the staff. In that situation, we always offset the plan asset and the plan liability to report it net in our financial statements, if you go through a typical financial statement that has such arrangement. Okay, but that is possible because of those two conditions are met. Because the planned asset is not the asset of the business, it is the asset held in trust by the entity on behalf of its employees. So that even if the entity go bankrupt, no court, no order, no realization can take over that asset away from that company. No, because it is not for the company. The company owes that asset in fiduciary capacity on behalf of the staff, is the asset of the staff. Okay, that is that in that light. Now, the other example that looks similar, but offsetting is not permitted, is like when you have a lease. Okay, you have the right of use arising from the lease as an asset, and you have lease obligation. You can't offset because by the nature of a lease, it is not necessarily correct or agreed that the lease asset will have to be realized to settle the lease obligation. They are two separate events. Okay, and that means in that situation we cannot offset, and that's what this speaks to. Comparative information is very key. You must always show, except if this is your first year. But if this is your second year or more, you must always show comparative of your previous year results, even if there's no significant activities. The last one is your reporting period. Conventionally, our reporting period should be 12 months. But due to you just commencing business, due to you changing your accounting date, or due to you ceasing your operation, your reporting period might be more or less than 12 months, but it can be as short, lower than 3 months, and can be as longer than 18 months. You must take note of that. Okay. Okay, these are other informations that are provided, and I'll likely take us to the template we've developed. And this also summarizes what we've said earlier in terms of information contained in the notes. Okay, if there's any question we can ask at this point before I more or less take us to one of the templates I've created. Any question?
None from me.
Okay, any question?
No for now.
Okay.
No question for now.
Okay, now we can all see these templates. Okay, I've created these typical templates for Finponomics in order to depict what you need to have. Now, first, you can see the template I've created for statement of financial position. Okay, because I barely assume that these are the items that may result from the operations and activities. It is not cast on stone. It can be increased, it can be shortened. Okay, statement of profit or loss and other comprehensive income. I've chosen the order of function over the order of nature. But again, Olumiwa, you are the one that wanted to check something. No, is it Olumiwa or Ibi that?
No. Yes, it was Coyote.
Okay. Yes. Have you checked?
Yes, I've checked. Ours is basically it's in as a result of function. I could just forward it to you now, so you could just see to confirm. Or is there any way I can share my screen?
No, you can share your screen. I can give you a right to share it. Okay.
Please just give me that.
Okay. Let me stop sharing. Let me stop sharing so that I can share yours.
Okay. Can I go ahead?
Yes, sir.
Okay, share screen. This is the unsigned one, though. But
no, it doesn't matter whether it's signed or not.
Okay. Can you view this?
No, you have not opened it. Or share, go back to your screen and share what you have opened.
Oh.
You know, that's the uniqueness. You have to, since you are not sharing your desktop, you are only sharing the page. Therefore, you have to go to your page and share it.
Okay, but it's telling me you are screen sharing. So
Yeah, you are screen sharing, but what you are screen sharing is your folder, not that document. Go to share again, show you some pages. You now click the page.
okay.
Otherwise, you can put it on the chat so that I can download it and help you share it.
Okay. Okay. Can you just give me your email? Let me just forward it to you right away.
No, just follow this on the chat.
Okay.
No, you can upload document on the chat.
Okay, on the chat. Okay, let me try that. So I don't waste our time. I don't have that function. When you say the chat, the WhatsApp chat, or
No, the chat on your Zoom. There's a chat section on your Zoom. Click it. You can attach document for everyone.
No, go.
Yeah, the icon before share screen is your chat. Just go down the icon before share screen.
Okay.
That's where you have your chat.
All I can see here is stop video, participant, new share, pause share, annotate, remote control. That's all I have here.
No, you see a continuation, like something like 3 dots. Click on that dot, it will show you other things. You see chat.
Okay, yeah, I've seen that. Okay. Record meeting info, disable participant, show names, hide video, share computer sound, optimize, and leave.
Is this
okay, chat. Okay, I've seen chat. Okay.
And ensure you pick everyone so that once you share it, you can also.
Yes. So do I use, I should use, the option is Dropbox, Microsoft OneDrive, Google Drive, okay, my computer.
Just click on the file. Once you click on the file, just drop your file.
Okay, I've seen that. Thank you. Okay, it's coming. It's a zip folder. It's coming.
Okay, you can drop your share screen now so that I can continue. Okay, I think it has dropped. I believe you can all see it now.
Yes.
Yes, we can.
Okay. Okay. Now, this is your revenue. Which order can we call this? Which order can we call
order or function?
Order or function, okay?
Function. Order or function.
You don't have other components. Okay, you have one item, currency translation differences.
Yeah.
Okay. Now, okay, wait. But I have an exception to this account.
Okay.
This account is presented in USD.
Okay.
And it's not consistent with the requirement of CAMA.
Okay, yeah, that was what actually was called special purpose FS.
Yeah, but which one do you now present for regulators? Because this is a company itself.
Of course, yeah, it's two. We prepare we have two shareholders basically. 51% owned by a foreign investor, 49% by a Nigerian company. So the foreign investors, that's the 51% shareholders, they prefer the special purpose, FS, so they can, integrate it with their own group. But for Nigerian we have the Nigerian FS.
Where's that one? Because remember that we said general purpose. So that general purpose means the one that satisfies the law. Do you understand now?
Okay.
The one that is available to everyone, not specially for somebody else. Okay?
Okay.
Yeah, because what I would have expected they do is that to satisfy everybody, you're supposed to have dollar and naira side by side.
Okay.
That's how it's supposed to be done. That's what's done for many companies. You understand? Which means you use one stone to kill two birds.
All right.
Without anything. Because even they call it special purpose. All what they've used is in tandem with IFRS. Everything here is IFRS. Therefore, it's no longer special purpose. The only thing that makes it special purpose here is that it's not in compliance with CAMA, because financial statements in Nigeria must be presented in naira. Even if your functional currency is dollar, you cannot put dollar side by side. Am I making sense, sir?
Correct. Yes, you are.
Yeah. Okay. These are things that we do for organizations so that going forward, you're always compliant and you get it right. Do you get what I'm saying now? Okay. Now, who can speak to?
Sorry. Instead of preparing it side by side, we prepare the FX and USD separate and the NGN separate. So for the purpose of Nigerian law filing, we file the NGN. So we can share the NGN with you while you work with that. So this UXD is just for the foreign investor. So we have the NGN. And I believe, I don't know, maybe New will share the NGN with you. But if not, I can share one of the NGN signed FX with you.
No problem, you can. But I would advise you, sir. Hello, sir. Hello, sir.
I can hear you, sir.
I would advise that going forward, you can do it side by side. The only issue why you might not be able to do side by side is if you have any unique information contained here that will not be contained there. Like something that speaks to your confidential business secret or anything. But from what I'm seeing here, there's nothing like that. It's purely normal financial statements. Only that it is denominated.
For all the previous financials, we didn't put it side by side, USD and NGN. It's done separately. But sorry, I just want to confirm, is it compliance-wise, can it be put side by side on same financial?
Yes. That's what, for example, let me give you an example. In Nigeria, every upstream company, that is exploration and production company in Nigeria, dollar is the basis of doing transaction. They sell crude in dollar, they pay royalty in dollar, they pay tax. I get what I'm saying now.
Yeah.
Now, but they still present their financial statement both in dollar and in naira. For example, let me try and check for Seplat. Seplat is a.
Yeah. But for us, we are not a crude, we're just a
no. I'm trying to explain the same thing. What happened is that your functional currency is dollar, I think so. You earn dollar as your rent.
Yes.
That's what I'm saying now. You are like them now, that all what you do is mostly dollar. You earn your revenue in dollar. You understand? If your primary currency, where you earn revenue, is dollar, that is your functional currency. which might be different from your presentation currency. Am I making sense, sir?
Yeah, you are. It's just a little bit. I want to put an input here. You are making sense. You know, some of our clients or tenants pay in Naira. We invoice them in USD, but they pay with the NAFES rate or the prevailing rates to pay in Naira. So it's mixed.
We are still saying the same thing.
Yeah.
Dollar still determines your revenue, because the pay in Naira does not mean, is it Naira you determine the revenue to them?
To the shareholders.
No, not to shareholders,
to the tenants. It's USD. It's
exactly.
USD.
Whether they now pay Naira or not is secondary. Even Naira they pay, the base point is dollar. You have now agreed the rate. Do you get what I'm saying now? That's what I'm saying, that your functional currency is dollar, because your investors is also dollar. The house you built probably is dollar denominated. You acquire the properties and all sorts of things. But what I'm not saying here is that you can as well do like oil and gas. I just gave you an example, not necessarily that you are in the same industry, but most of the activities in dollar, but they still present their financial statement in dollar and Naira side by side. One, it will lift you of costs of duplicating financial statement. For example, if I have to do this for you in Naira and do it for you in dollar, the price I will have charged you as a single statement is different from charging you as separate. Am I making sense?
Yeah.
Even the work you'll be doing will be duplicated.
You're right. I think that's actually why they always prefer to split it, is because of the income aspect. That's where my mind went to when you first spoke. And you are very right on that. Going forward, I will tell them to make it just one sheet, and then we'll pay lesser.
Do you get what I'm saying now? And the beauty of this is that going forward, I think you are in a better position to do it yourself for different reasons. One, you need to start to add value, because most of other things we do will be taken over by robotics technology. Once you are doing something repeatedly, it will take over. One of those critical things we need to add value on are things like this. And that's why you are doing this training, whereby you can do it yourself or with little support. For example, I have companies that I've assisted for 2-3 years. Today, they fully prepare their financial statements. These are things you add value to your company by reducing costs. Do you get what I'm saying now? Are you getting the logic? And that's the benefit of it. Okay, secondly, also, the regulator has frowned seriously. That's why this training I've organized for many companies, that your auditor should never prepare your account on that no basis. Do you get what I'm saying now? For example, you can't disclose this in your financial statement that they also prepare accounts that they audit. Do you get what I'm saying now? Because FRC take it seriously now. Everywhere in the globe, you can't. You cannot call another firm to do the account, and another firm audit is different. But the same firm cannot prepare an audit, even though they might tell you that this is another unit, this is another unit. They said, no, that is not applicable. That's why even in the UK now, they are breaking the big fours, separating audit from other advisories, so that they are never the same firm, ever. Okay, but we can always speak on that. But it's something that as time goes on, you need to, because no one can appreciate what is yours than you as time goes on. Do you get what I'm saying now? And that is just it. Okay. Now, I said I wanted to share. I'm trying to download the one for separate.
Mr. Muyiwa, just a question. Now, if you are talking about, from the angle of, adding value, is it possible where, I'm looking at control here. As the accountant, I prepare the management account, which I give to the auditor to audit, with my own TB. He gives me his adjusted TB. Yes. Now let's assume I'm so grounded now. Is it also okay that I now prepare the FS? Then when it comes to things like stamp, FRS number, would it fly with the regulators that, the accountant who prepares the management account also prepares the FS, even though he doesn't do the audit?
Okay, let me explain something here. The law does not know accountants. Accountants are tools in the eyes of the Okay, what the law knows are those that are saddled with the responsibility of producing account for a company. And who are those? The board, the CEO, and by FRC Act, the CFO. Do you get what I'm saying now? Right. But the CFO as financial reporting manager, as finance manager, as management accountant, and co. It's not those ones that will take responsibility. Am I making sense?
Yeah.
The CEO that is not even an accountant, must take responsibility. That's why you have to challenge you, ask questions. If it's not comfortable, we'll tell you, no, this is not right. You call the auditor, internal and external, help me check this. Do you get what I'm saying now?
Correct.
Therefore, your responsibility is that you prepare accounts. When I say you, not necessarily management accountant. Most all companies separate the function of management accountant from financial reporting manager. Usually, financial reporting manager is the technical person for financial statement, that is general purpose, which you also produce to the auditor. You know, two things the auditor will do. The auditor will audit your trial balance and still audit your financial statement with respect to presentation and disclosure of information, which are not in trial balance. Do you get what I'm saying now?
Yeah.
Which means you as a management accountant that also manages the GL, for example, you are responsible for what comes out from the trial balance. Now, the financial reporting manager now take it up from there to produce IFRS account with disclosure, get information from different department, unit, and everything. And when he produces, he submits it to the audit, that is management, CEO, CFO, all of them will, how will I say it, we review it, agree that it's okay. They present it for auditors to now audit. Auditors will audit the trial balance to certify that those items are correct. We audit your disclosure, we audit your presentation, and every other thing. Do you get what I'm saying now? Therefore, who signs account, whoever signature is on the account must have FRC number. And that is totally different because those are the ones that will take responsibility. By law, you will not be held responsible. It is those that are saddled with that responsibility that will be held responsible. Am I making sense, sir?
Oh, yes, yes.
Yeah. Okay, I'm trying to get Seplat.
Okay, while you get Seplat, now you spoke about the auditor also auditing, you know, the FS if it's IFRS compliance. So that their work is in two folds. First, they audit my trial balance. Then when I'm done again, they now audit my FS if it's in.
No, their work is not in two folds. I'll read audit opinion to you. It's still one. They are auditing the set of reports you are presenting.
Okay.
But the report itself, the base point, the engine room is the trial balance.
Yeah, sure.
Which means, for example, if you say somebody should come and appraise a restaurant, he's going to appraise the kitchen, where the food is made, what is the composition of the food, how is it being prepared, how clean is the environment. It will still come to the, what's it called, the flood, it will be served. How is it being served? How is the ambience? Is the AC, you know, you are auditing everything as a whole. Because the output of everything is the financial statement, which then means that you can't say I've audited trial balance, therefore I've audited the financial statement. Okay. And I can't say I've audited financial statement without auditing it up to the level of trial balance and events. Okay. Am I making sense, sir?
Yes, you are.
Okay. Sorry, I'm close to it. Okay, I'm there now. Let me share it to you guys. Can you see Seplat? Can you see it?
Yeah.
Now you can see Naira and dollar. Dollar is a functional currency. Naira is a presentation currency based on Nigerian law. Therefore, which foreign investor, I don't think anybody has more foreign investor than Seplat to some extent. They are even listed abroad. Therefore, can you get what I'm saying now? Which one this? Yeah. Now, also, let me show you the auditor's responsibility in terms of audit. Now, I'll read this to you. We conducted our audit in accordance with international standard on auditing. Our responsibility under those standards are further described in auditor's responsibility for the audit of consolidated and separate financial statement section of our report. We are independent of the group in accordance with the International Ethics Standard Board for Accountant Code of Ethics for Professional Accountants and other independent requirements applicable to performing audit of separate petroleum development company, PLC, and its subsidiary. We have fulfilled our other ethical responsibility in accordance with the ISBA code and in accordance with other ethical requirements applicable to perform the audit of Seplat Petroleum Development Company, PLC, and subsidiary. We believe that the audit evidence we have obtained is sufficient and appropriate for the basis of our opinion. Now, I want to check, okay, auditor's responsibilities. When you read it all, you find out that the responsibilities start from risk management review, governance review, financial statement review, business review, do everything up to the level of the financial reports. Because audit is not about number. The underlying itself, the business itself that produces that number, does it exist? Is it a going concern? Does it have governance? Does it have internal controls? How is it managing the potential risk and all sorts of things? These are things auditors will do in accordance, in addition to the financial statement. Am I making sense?
Yes.
Okay.
Yes, you have. Please, which auditor audit this account, please?
So,
Yes, I. Yes,
sorry,
I
have a question based on what the report I have here with me. That's.
Yes, can you see it now? Can you see it?
Okay.
Yeah. Okay.
Hello.
Yes.
Hello.
You are.
I have a question based on
Yeah.
what you just said now in terms of auditors' responsibilities and then the new regulation as regards who prepare the financial statements. I want to read from here. I want to read from the gross financial statements.
Okay.
We conduct our audit in accordance with international standards. The same thing you have read. We are independent, and then the other information, it says the directors are responsible for other information. The other information comprises the report of directors, statement of directors' responsibilities, value-added statements, 5-year financial summary, but does not include the financial statements and auditors' reports thereon. That means PwC provided the financial statements and then the reports. This should not be. Is that what you're trying to say?
Now, who prepare financial statement cannot audit that same financial statement? It's a general.
Yes, I know from this study and everything back then, but I found out that this is the reality. And
No, the reality has changed. The reality has since changed with FRC regulation. Okay, let me try and check. Let me go to FRC site for you. You could also engage. That's what I said. If you engage another Big Four or any other firm to present financial statement for you, that is accounting services. You can't do accounting services and still audit that services. It's common rule. But let me go to FRC.
Self-review sort of.
Yeah, these are, before it was rampant, but when FRC was initiated, they took it up and they now have to even issue a regulation on it. Let me try and share the screen. Okay, you are ready then? Okay, I want to check IFRS regulation. Okay, these regulatory filters, let me check. Okay, no, that one is for IFRS. They have this portal for regulation. How come I'm not seeing it? Okay, let me check links and resources. Okay, come and see here. Public notice for preparers of financial statement and external auditors. Can you see it? Can you all see it? Okay,
yes.
let me. The attention of Financial Reporting Council of Nigeria has been drawn to the fact that some professional accounting firms are serving as auditor to the entities that are not complying with financial reporting standard issue adopted by IFRS and or issuing financial statements that are not certified by these. Who are these? The avoidance of that, a professional accountant exercise of his audit function shall carry out its function fully independent and shall not act in any manner contrary to this or engage in activities. Where professional accountant make a report on financial statement of an entity which he has audited, he shall express a clear written opinion in his report, giving details as to whether financial statement as a whole give true or fair view, comply with this. A professional accountant shall not in his report express opinion unless he has complied with this. The object of the council shall ensure accuracy and reliability. Okay. Take note and henceforth desist from practice or risk being sanctioned by FRC. This is one. Act in a manner contrary to code of conduct and ethics that was enforced. Okay, that's one. There's another one they had. There's this regulation. I'll search for it. You know, apart from let me check whether Directorate of Inspection and Monitoring. Because they have this regulation 1 to 23 now. Let me see if I see. Okay, first reverse Gaussian regulation. can go to 30 and 31, but I want to check the aspect of the auditors. But let me go to 30 and 31 first. And the council shall make and issue such rules or ethical code of practice to establish its procedure and policies for the purpose of monitoring registered auditors and professional rendering service to public interest entity. The council, okay, the code adopt the code to observe that every member of the board, director, this and consultants firm is discharged of the function. But I will find that document. Okay, this is some of the, this is a write-up by Deloitte on the revised regulation, but I need that document itself. But I'll get the document and share it with you guys. But again, you all know that in rules of professional practice and even audit, you can't be a preparer and the auditor at the same time. Okay, the arguments the firm were using then was that we have a separate function, accounting services, which is different from auditing. But the regulator said, no, there's nothing like that. That threat, conflict of interest still exists, because if you are making much money from accounting services, you are likely to compromise because you don't want to lose that money. That's why similarly, they'll tell you that any audit that constitutes more than 10% of your global income is a risk because you don't want to lose. You get what I'm saying now? Those are the things that have more or less been considered from ethical perspective. But let's leave that. Now, I think we've spoken to the settlers. Okay, the most important thing here is what we've shown here, that we can do it together. Okay, now let's go back to now we have statement of changes in equity, we have statement of cash flows, and we have the notes. And when you look at this note, if you have checked it between yesterday night and this morning, you'll find out that virtually all what is required are contained in this note. And this information here will only change year on year based on if our activity has increased or reduced, or if a standard has changed. Otherwise, 90% of what is contained here is static. Okay, now where our work will now start from, apart from modifying the notes year on year for new events or standards, is that we'll come here in the analysis to start to supply information here. Now, what I wanted to demonstrate to you today is that how you can prepare financial statement on the click of a button at every point in time you generate your trial balance, which means this template will already be created. You don't have segment reporting, but I only showed you if there's segment reporting. You have your employee details. You have your administrative. All of this, we have to complete them. And you see how we link them. And on a click of a button, everything will automatically populate at every point in time. Okay. Now, what then do we need to do to start? We'll go on break now, and we are going to start 12 on the dot. Let's just have 8 minutes stretch so that when we start, we'll start with the information provided. And what is information? You all have the slide. We have a simple trial balance given to us. This is just a trial balance given to us. What do we do with it? These are the things we need to do now. Okay, let's just have like 8 minutes break and we'll come back.
Okay.
Welcome back, everyone. I hope we're all on our seats. Olumuyiwa, I can't see your face. Oladimeji.
Some of us did not leave our seats.
Okay, thank you, sir. But it's expected that you should at least stand up and exercise.
We decided to sit down so that when you come back, you give us something to take as item 7.
Okay. No problem. Okay, now
for somebody that came late. What of those that came earlier?
I think the person that came most early is Musa. I think I'm.
Bamidele.
Musa.
Yeah, Musa. Yeah.
Mm.
I think when I logged in, I chatted you that you started with before time.
Mr. Muyiwa, Bamidele has to confess, he's the only single man amongst us. He has no responsibility. His mother cooks for him.
You are right.
So he has to be the first to come. All of us have three kids minimum. Bashiru has 7. So you can't compare.
Responsibility more than you guys that are married.
Therefore, you have to do the need by next year. Okay, or before this year runs out.
Yes, we have some for him in stock. We'll choose for him after this meeting. We his colleagues.
Okay, now this is a typical trial balance. Okay, now let me hide this first. This is a typical trial balance, and I will explain. Some trial balance comes out like this. Okay, but this is not the best of a trial balance. Okay, that's why most trial balance now are set up where they come out like this. Let me show you. A typical trial balance will come out like this. Opening balance, debit transaction for the period, credit transaction for the period, and closing balance. Now, what I observe is that most systems have developed different reports that can show you just debit and credit cumulatively. And some will show you opening, debit, credit, and closing. Okay, this is the best of trial balance, but I'm going to take you through the two and see how we can more or less make use of it. Now, if you are given this trial balance, the first thing you do is to convert it to a balance. What they gave you here are just debit and credit balances. But what I needed is a single balance. Now, single balance, which I call modern TB, just shows me this, which will show positive and negative. And it depends on how you set up your system. Most systems I've come across always set up debit as positive and credit balance as what? Negative. It's like coding, so that let the system understand that anytime you see positive is debit balance. Anytime you see negative is what? credit balance.
Right.
And how do you do that? I just say cell C minus cell D. Or some system will generate this balance for you at once, which means some system will just generate this for you as trial balance, which means this is the top trial balance you can see, just the balance like that. Of the 3 trial balance set I've shown you, the best one is this one that I've shown you, where you have opening, debit, credit, and closing. Okay, why I'm taking you through this mode is that not every time you get information the way you want it. You must learn how to manipulate your information towards what suits your use. Okay. Now, what next do we do is that I need to create these 4 items. And I will explain them. Remember, we have discussed financial statement in line with IS1. Element, how many elements do we have in a financial statement based on conceptual framework? We have 5.
Oh.
Asset, liability, equity, income, and expense. Now, what you do is that
Equity.
you're setting up this like a chart of accounts. This code and this, I understand what they are because it's your trial balance. For example, you must be familiar with them. You know what constitutes an asset, what is a liability. Therefore, what do you do? Instead of you coming here to say this is assets, instead of you coming here to type that the grouping is non-current, instead of you to come here and say which class is it, is property, plant, and what? Equipment. Instead of you to come to detail lines, like detail line is that this falls under property, or let me say lease property. Now, this same thing is what I'll put for accumulated depreciation for lease property. What am I trying to do? So that when I create the account, things that falls under the same line will be grouped together. And this is how I'll complete for everything. But instead of doing that, what have I done? Instead of me doing that, what I've done is that I can easily create a drop-down list. See what I've done? Because I know my end from the beginning, I create this 4 box here. Now, I know that I need assets, liability, equity, income, and expense. I know that my classification of assets and liabilities are into current, non-current assets and liabilities. Now, my class, remember I discussed class for you. IFRS has defined most of the classes. I have administrative expenses in my P&L. I have borrowing in my balance sheet. I have borrowing that is bank loan different from short term. I have cash and cash equivalent. I have cost of sales. All of these items are what we call financial statement line items. What I call class now is the same thing as financial statement line. If you go back to our financial statements, let me go back to my financial statements. Where's the PowerPoint? Now, these are what I've brought out. I brought out all of these items here. All of these items here. Those are the things that I brought out and I put here. And you see the beauty. The beauty is that you can increase it as much as you need it. And I'm going to show you how you do that. When you check this, these are items that are probable in your financial statement. Okay. And likewise this. Now, for example, now, I can decide to create payable here. Instead of not creating different layers of payable, I'll just create one layer of payable. Every other payable, I can remove it and put it here. I'll create one layer of receivable. We've not started. I'm just showing you these items that are here are according to various categories of line item in the financial statement. I can come here, third party, receivable. I can come here, I can say this is intercompany or related party. Therefore, all of this. Now, these are detailed note lines. Detailed note lines are when you go to your note, for example, here. All of what I want to see here. All of what I want to see here. My revenue, do I want to break it into this category or product line? My cost of sales, do I want to break it into this? My administrative expenses, my employee costs, how do I want to break it? My administrative, how do I want to break it? My selling, how do I want to break it? Other income. All of how I want to break it here is what I'm going to replicate here. That I'm replicating here. Okay, at the end of the day, what do I do? Here, because I've typed those things there, I can easily come here and say, you go to your data. Can you all see? You click data dialog box. Okay, let me do something so that you can. Okay. Now, you go to my data. You go to my validation. Can you see data validation? You click on data validation. It gives you 3 items. You click on the data validation out of the 3 items. And you can see your setting. I'll go to value. Any value, what I need is list. I want to list the item as a drop box. Now, the source. This is the source. Once I click the source, where do I want you to pick from? I want you to pick here under element, pick these items. Once I do that, I say okay. Once it's okay, I go back to it. You see that it shows me a drop box. Can you see this? Can we all see it? Now, once I click it, what can I see? Drop box. I can set it as select so that when I drop it down, it's only once in lifetime you set up your accounting system and chart of accounts. So that anytime I come here, if this is liability, I just click liability straight. Like that, like that. And that's how I'll complete the setup for that. For grouping, I come back here again, go to data, click data validation, click data validation again. Instead of any value, I click list. I go to data source. Remember, I've created this. And the beauty of this is that when you create this, sort it in alphabetical order so that when you are checking the drop down, you can easily look for the alphabet rather than just roaming up and down. Therefore, I select this again. And I say what? Okay. I come back here. Can you see the drop box? When I click here, you could see all of the items, which means I can easily scroll alphabetically and pick the items that it relates to. Okay, but here, let me just click select so that I want to set up my system.
Mr. Muyiwa, I think you picked class for grouping, except if I'm the one mistaken.
Okay, I think I picked that. Okay, sorry. Thank you. Thank you very much. Okay. When you come down here, you have it, Abby. Thank you. You do the same thing for class. Class is the same thing as financial statement line. Let me put it there. FS line. And I'll show you one secret also as we move on. Yeah, shows everything. I click select. Details, which is the note line. Details is the same thing as note line. And you can create note lines. It can be note line 1, note line 2, depending on what is the level of details you want to provide. Now, once you do this, you can drag it down. Now, this is where your function comes in. And this thing you want to do now, you only do it once. The only time you come back to it is if you have a new line item that is added this year. You just add that one line. We are going to see it as we move on. Or you want to reclassify that, okay, this thing before it's always on this, but now it's no longer that. Or you want to correct your classification. You just come back and pick that particular item and correct. Therefore, what do you do here? I come here, I say, okay, oh, this is assets. Because I know all my coding very well, I can easily tell you that from year to year, they are assets. Because remember, coding of account is done based on the element of financial statements. Therefore, I can tell you that year to year, everything one owes something, they are assets. Anything two, they are what? Liabilities. Now, take note, I have a video on how to set up accounting system for the first time. If you have not even have any GL coding, you can watch that video. That was the video I started playing before people resume to I'll still send you the link. Okay. Now, Anything 3 is also liability based on this setup, but only that they are non-current. 4 is equity. 6 is income. 7 is cost of sales, which is an expense. 8, their operating expenses downward. Now, I've set up elements. Now, current and non-current, you only set it up for asset and liabilities. Now, I know that things like PPE, leasehold property, all those ones, including the accumulated depreciation, they are non-current. I know that cash, they are current. Cash, bank balances, up to investment, bond, all those ones are non-current. Up to federal government bond. Inventory, they are current. I'll just copy and paste. Most of these ones are current. Insurance prepayment, usually they are current because you don't prepay more than 1 year. If it's other prepayment, it can be like rent. Rent can be non-current because it might be more than 1 year. And later on, you have to break it down. Deferred tax is non-current. Remember from IS1, deferred tax asset or liabilities is non-current. Trade payable, that's liability, current liability. And most of these liabilities here, up to level of corporate taxes and education taxes are deferred tax liabilities non-current. Bank loan, they might be non-current. Provision for decommissioning. Are you seeing the setup now? This setup is not repeated. It's only done once. Okay? Share capital, there's nothing like, I can say not applicable. And expense and income, not applicable. Those ones doesn't have such. Remember, from the principle of IS1 we have discussed. Now, under here, you said this qualify under financial statement line as property, plant, and equipment. Remember, I told you you should sort it alphabetically so that it will be easy for you to trace. PPE, I'll come here. All of these items here, they are PPE, except computer software. Computer software, I'll say that is intangible. Let me enlarge it so that I can see it clearly. Intangible assets. Now I'll show you if it's not there, how you can create it there and it will show. This intangible assets, I copy and paste. Now, this is cash and cash equivalents. All of this are cash and cash equivalents. Now, look at something, please. Can we look up, please? Now, see here, everything cash and bank supposed to be cash and cash equivalent assets. But you can see that some bank balances are negative. You know, your bank account can turn negative if you overdraw it.
Yes.
Therefore, you are not going to leave it in assets. You are going to reclassify it and come here and say it is liability for that year because it has turned from positive to what? Negative, given that you have overdrawn. Therefore, I'll come here and change this. Therefore, it's no longer current asset, it's current what? Liabilities. Here, it's no longer cash and cash equivalent, it's now borrowings. Do you get what I'm saying now? Therefore, I can easily use this to correct for this. It's not that I've made mistake, but because it has oscillated from positive to what? Negative. Equity investment, those ones are financial assets. Do I have financial assets? No, let me see whether I have investment. Investment in financial assets. I click them. I think I have to enlarge it more. Okay, these are financial what? Assets, up to bond. Investment in material, that one is inventory. I copy. Most of these items are inventory here. Next, trade receivable. All these are receivable. I can classify this as other receivable or I take them as other assets. Let me see if I have other assets. Okay, I have other assets. I can put all my prepayments in other assets and advances. Okay. Now, let me just put this in other assets. I'll put this one in trade and other receivable as advance. This one is in prepayment, non-current, prepayment for non-current. These are trade payables. This one is tax. You have current tax payable separate from trade payables. If you go by the classification under IS1, current tax payable, deferred tax liability, other payables, CGT payable, capital gain tax payable is current tax payable. Wage and salary payable, these are other payables. Now, allowance for bad and doubtful debt, that one goes with assets. Remember, it's a reserve account. You link it with the asset account, it's current assets under trade payable, trade receivable. Provisions. Do you have provisions account separately? If you don't have, you can create. We have it. Bank loans. Share capital. Dividend is charged not as an expense, but it's charged to retain earnings. Just put retain what? Earnings. Evaluation reserve. AFS reserve. You don't have AFS reserve. Okay, let me just create it. We'll come here. You know, it's under class, Abby. I can create AFS. Now, I'll create it as fair value reserve, which means I can copy this. I'll cut it off and give one space here to bring it down so that there can be space here for me. Now you see when I have it, you'll see how it's going to replicate itself and show off. Fair value reserve. Therefore, I go back to my TV. Where am I? And I'll create fair value reserve. Can you see it there now? Fair value reserve. Now I've got into income section. These are income. I'll take them as revenue. These are revenue lines, different from other income. Return inward, that's reducing my revenue. What I sold that was returned. Rental income, that one go to other income. Other income. Okay, I think the fair value reserve, I have other component of equity. I have other component of what? Equity. Remember, I described it as every other ones that include fair value reserve, actuarial gain reserve, foreign currency reserve, and co. Okay, that's what I should use. Okay, now, which means what I'll do is that I might more or less have fair value reserve in this. Let me check. See, can you see? Okay, this fair value reserve, can you see there? Therefore, the one I created earlier is not necessary. I can leave it there, but it's not necessary. Okay. Other gains. Rental income should be now this other income, instead of me to have it here, under financial statement line is too much. I'd rather put them under note line. I'll now create a single rental income. Therefore, what I'll do is that I'll come back here where I have the line item. All these other income, 4 layers, I'll put them somewhere here. I need 4 layers. I'll cut it. I'll count 4. 1, 2, 3, 4. After that, I'll put it here. Therefore, I can copy this. These 4 layers, I can put them here. Okay. Therefore, I'll just put other income here, so that I won't belabor my financial statement line. Therefore, I can close the gap here. Even though if I don't close the gap, it doesn't change because I've said don't show me blank space. Okay. Now I'll come here and say income. You won't see income from finance again. What you just see is other income. Other income, yeah? I can copy that for every other ones up to scrap. Okay. Cost of sales. I click cost of sales. Basic salary. I'll click admin. All of these are admin. All of these are admin. All of these are admin. I think in this question, we do have selling and distribution. Okay, but I can create it later as we move on. Now, exchange gain, I can put that as other income. Corporate tax, I'll put that as current tax. Income tax expense. Income tax current. Capital gain tax is the current tax. Deferred tax. Income tax deferred. Okay. Now, PPE, do I further categorize it? Let me see. I didn't further categorize PPE, but I can do it now. Let me just hide this. Now, I didn't have PPE. I can create PPE here. I can create like 5 categories of PPE. I can say PPE, freehold property, PPE, leasehold property, PPE, furniture and fittings, PPE, plants, and machinery, PPE, computer stroke IT equipment, PPE, motor vehicle. I think those are the PPE I have. Therefore, as I've created them there, when you come here, you can see them. Can you see? This is leasehold property. And I can copy it for the depreciation. Now, this is PPE for freehold property. I can copy it for the depreciation. PPE for plant and machinery. I'll copy it for the depreciation. PPE for motor vehicle. I'll copy it depreciation. PPE for furniture and fitting. PPE for office expenses. Office equipment, IT. IT is the same thing. Okay, computer software is intangible assets. Let me check whether I have software. Intangible asset software. Okay, I can go and create it. Intangible asset. Software and intangible asset orders. I come here. Intangible assets. Software. Software. Okay, now this is capital work in progress. You know, IAS 16 says that when you are constructing an asset or you are procuring an asset that has not been readily available for its intended use, you can't depreciate. And the reason why you can't depreciate is that you have to still warehouse it in what we call capital work in progress. Now, let me check whether I have PP for capital work in progress. I don't think I have. Let me go and create that. Can you see the way we create accounts? PP, capital work in what? Progress. I can sort it. Okay. Since I've sorted it, capital work in progress will come before this. PPE, capital work in progress. Now, you know the reason why I'm putting PPE in front, so that when you sort, they are still together. You can easily filter them. But if I just put computer equipment, furniture, it will scatter them across other lines. The same thing I did for intangible software, intangible, so that everything that belongs to the same class can be grouped along with one another, even when I sort. Okay. I come down here. Capital work in progress. I remember you don't depreciate that because it's not yet available for its intended use. Okay, what else? Cash and cash equivalents. Therefore, my cash, is it petty cash? Okay, I don't have it broken down. Therefore, I can come here to break down my cash into cash in hand. cash at bank and fixed deposits. Three lines I want to create. I'll say cash and cash equivalent. Cash in hand. Cash at bank. And tenor deposit. Therefore, I can come here and say cash and cash equivalents. These are petty cash. All my petty cash, I group them together. At bank, I group them together. These ones are bank overdrafts. Via borrowing, bank overdrafts. Okay, let me go and create it. Borrowing, bank overdraft. BO. Come here. These are still normal bank. Let me assume one of them is, okay, let me assume that these ones are fixed deposits. Okay, financial asset, is it equity investment or? Okay, I can break it down. I have bonds. Okay, let me create financial assets. 3 levels. Equity, investments, corporate debt, and government securities. Depending on how you want to create your note lines, that's how you do it. I'll come here. This one is financial assets, equity investments. This financial assets, corporate bonds. This financial assets, government securities. Okay. Inventory. Do I have categories of inventory? If it's a product line, I don't think I have categories of inventory. But let me just create categories of inventory. Let me just start to create categories. Let me create it like a, let me use petroleum stuff. Inventory. I can say PMS. Inventory. I can say AGO. And I can create one more inventory. I can say DPK, that's kerosene. Now, let me just marginally close the inventory like this. Okay, now trade. Trade receivable. Like I said, this third party. I can use that to say this one is intercompany. I can say these are orders. Okay, everything I do is hypothetical. You don't need to classify other assets. Well, let me see whether it has classification. Other assets don't have classification. We just click not applicable. And instead of not applicable, I can create it blank, and you're going to see it as we move on. Prepayments. Okay. Now, for medical, that one is medical. You can't prepay more than 1 year for medical. That one should be current. The other prepayment is rent. Do I have prepayment as broken down? No. And I decide not to break it down, therefore not applicable. Trade payables. Trade payable, third party is not there. Let me create it. Third parties. Trade payable, third parties. Let me say other, let me say across joint venture payable. Tax payable, that's statutory pay tax. It doesn't go into current tax. Statutory obligations. These ones are corporate taxes. I can click current tax so that I can show education tax separately from others. I can come here and say current tax payable. CIT. Tertiary education tax and capital gain tax. Company income tax, tertiary education. And I think here I have capital gain tax somewhere here. Deferred tax no classification, not applicable. Okay, these are statutory. What else? These are other payables. Allowance for that goes under trade payables, third parties, trade receivable, third parties. Provision, not classification. Or let me check whether we have created any. But this no bound. You can create as you wanted to do that. There's none. You have already called this bank loan. You don't need to classify. Share capital, you don't classify, except do you have any classification for it? No. Dividend, that doesn't require classification. Let me check. I think I have for retained earnings. So I separate it from your opening retained earnings. Retained earnings. Okay, I can create for retained earnings. Retained earnings. Forward. Retained earnings. Dividend. If I come here, the first one is dividend. Second one is drop forward. Valuation surplus, no. Okay, no, I know what happened here. Year two, I've said we are going to classify it as this. Therefore, other component of equity, I'll create various layers. OCE, fair value. OCE, evaluation reserve. Therefore, I'm going to take them out of here, both fair value and evaluation reserve. Okay, so that here, I can easily come here and say, the first one is evaluation reserve under OCE, other component of equity. Second one is valuation, fair value. Now, can you see how flexible it is? Revenue. Okay. Let me create revenue. Let me try and split this revenue into just permit me. I'll be doing a lot of manipulation. Okay, I'll call this 500 to change the GN line so that I can call this revenue PMS, sales, AGO, and sales, kerosene duplicate. Okay, now what I'll do is to, let me just, this 155, I'll call this 55, and I'll call this 100, so that the trial balance will still agree. 1,100,000. I think my trial balance will still agree. Am I sure? Okay, C2. I think it's in agreement now. Okay. C2. Okay, it's still in agreement. Okay. Now I can call my revenue here. I don't think I've splitted my revenue. R. Okay. We can come back here, group our revenue, PMS, AGO, okay. This return, let's assume the return is on PMS. You still put it under revenue PMS because it's going to be negative, a reduction. Other income, rental income, what other income I'm going to put it as others. Other capital gains, scrap also, I'll put it here. Interest income, I'll put it income finance. Cost of sales, I have to split that also. Therefore, I have to put 250 there. Okay. I can put this to be, let me remove 40 from here. Therefore, this 60. I'll put 40. Not like this 6. 40. Okay. Yeah. My cost of sales. Let me also create cost of sales. COS. I can create 4 lines for cost of sales. I'll tell you what the 4th line is. Cost of sales, AGO, cost of sales, DPK, cost of sales, PMS, cost of sales, write-off to stock adjustment. You know, when you do your valuations in line with IST. Okay. Now I can come here. Cost of sales PMS. Cost of sales AGO. Cost of sales DPK. Now, this will come under personnel. Now, if you remember, before I have my personnel separated from admin. Okay, I can bring it back here. Where is it? I have my personnel cost. Therefore, I have to break it down. I'll bring all my personnel costs. Personnel. P. Personnel cost. Take it off here. The other ones also I wanted to take off. My financial impairment gain of financial assets. I'll bring it here. Do I have it? Okay, I already have it here. Okay, I'll take this off. Distribution cost, I have it here. Depreciation, I'll bring it here. Depreciation is already here. The other one is amortization. Is it there? Yes, it's there. If I take it off here. What other expense line that is not necessary here? Other operating expenses, I'll take it off here. It should be here. Other costs. what I'm trying to do is select, I put it on top because of the drop down. And I put not applicable last whenever I sort. Remember, all what we are doing now is a single setup once in a lifetime. Anytime you are coming to adjust is whether one line or two you are adjusting based on new items or a classification you are doing. Okay. Now, let me come back here. This is personnel. I'll put all of this under personnel. Housing, transport, pension. All these are personnel. Legal expenses, these are professional. Professional fees. Is there no professional fee or consulting? There should be professional fee. Okay, there's no professional fee there. Let me put it there. Or is there legal cost there? Legal. Let me just create professional fee. Okay, there's professional services now. How come I didn't see it? Okay, professional services. Audit fee. You know, auditor's fee must be disclosed separately. I believe we are aware, based on the rule of Karma, and that is in Nigeria context. Audit fee. Other. Okay. Okay, I think, okay. The first one was internal cost. Therefore, that one is our operational cost. That's for our internal audits. The second one is external auditors. You must not mix them together. Professional charges, we have professional charges here. This consulting, this operational costs, no, all these repairs and maintenance. Compensation, that's employee cost. Consultancy fee, that's professional. Cost of litigation, professional. External audit fee, okay. We add it together. Office and maintenance, this maintenance cost. Repairs. Operational costs. Oh, this is IT expenses. Do I have IT expenses? Okay, I'll put it as other operating costs. Repairs and maintenance. I have operational costs. What other expense line do I have? Let me assume all these are just operational costs. Impairments. I go to impairment section. Impairment of receivables. Bad debt written up. Depreciation. The lease is amortization. Okay. Computer expense is also amortized. Insurance. Miscellaneous expenses. Income tax not applicable because we've done that before. Okay. Oh, okay, I can still break the income tax for that, for note purposes. I have it here before. Okay. CIT. TET. And CDT. Is deferred. Okay, now I can come back, which is our last item there. I come here and say income tax, CIT, TET, T, deferred tax. Okay, now I think we've created that chart now. This is one-time setup, and you see that it took us some few minutes to do. Very straightforward. But look up, please. Look up. Now, you must always create this as a table. When I say table in Excel, it's not schedule or row and column. Table in Excel means that when you create something like this, let me just copy and paste now. If I create like this, This is not a table. If I want to convert it to a table in Excel, I will highlight it here or highlight it all. If I highlight it here, I come to insert. I'll now say insert table. Now, can you see that it has converted to table? And I want to make this one the head. But if select is not the head, I'll say no, don't make select the head and just do like this, which means select is part of the item. And I can name this elements of financial statements. Now, do you know the essence of it? The essence of it is that if I create a drop down, for example, I create a drop down here. Can you see seeing all of them, Abby? But the beauty of it is that if I add anything beneath, supposing I don't want to be cutting and pasting and sorting. If I add anything here, let me say I add bro, it automatically read it so that I don't need to go and drag again. When I come back here, you can see bro there. But if I don't do it like that, let me assume that I just put it as normal Excel, not Excel table, normal Excel schedule. Okay, and I do the same thing. I'm still going to see it, Abby. But when I put something under here, bro, it's not going to see it. It's not going to see it because it's not recognizing it. How do you know that this is a table? Can you see this mark here? This is something like a dark mark edge here. It shows that it's a table. Anytime I put something there, beneath it, recognize it and extend it. If I come back here, you see that it has extended it. If I delete it out, automatically it will show that it's no longer there. Can you see it? And that's the beauty of it. But if I do it here, it won't. Otherwise, what I'll do here, because this is not a table, is to bring the bro somewhere here. I just call here, I say bro. When I say bro here, you now see it. Because I try to manipulate it to put it in the middle. You understand? But that is why I've been using table. Just take note of it. Okay. Now, I've done it like this. Now, for beautification, so that I can easily separate those functional lines or columns, I can now put colors. But that one is not adding anything other than just trying to separate it and probably beautify it. Which means those colors not for anything. Now, also I told you that I can create many lines. I can still create detailed notes line 2. I'll call this line 2. And I've seen some things I want to further break down. What are things I want to further break down? Personnel cost. I want to break it down into salaries and wages, medical, training, allowance. Therefore, I can do that. I come back here. I can create note line 2. Under note line 2, I can have my personnel costs. Let me call it PC. Salaries and wages. PC. Medicals and welfare. PC. Life. PC. Training and development. PC. Compensation. PC. What else for allowances? Let me just keep it like that. Now I can come here to create that one. Data. Now I want to reference here. Now, where's my personnel costs? I have them here. Let me hide this to give me some space. Personnel cost basic. Okay, I've not drawn it down. I'll come here. Salaries and wages. PC. Allowances. Most of these things are allowances. Okay, I think there's pension. I omitted. PC pension. PC pension. PC, other personal industry, welfare and medical. Is that all personnel costs I have? There's compensation somewhere. Okay, that's compensation. PC. Compensation. Don't we have training? No training cost. Okay. Now, what other things can I break down? What other things can I break down? I don't think there's anything to break down again. Okay, but if you want to break down, you can break down as many as possible. Okay, now we've done the main work. Now, how do you produce financial statements? Now, what you do now is, can you look up, please? Let us pay attention here. You click here. Can you see where I'm clicking? Okay, and you click Insert, and you click Pivot Table. Now, I want it to put it on the next worksheet separately from this. And this is what he has done for me. I'll call it Pivot Financial Statements. And what do I want to do? I want to bring the element first. He has recognized that I have 5 elements and 1 level blank. Let me check which one is blank. Okay, he said this is taken. Let me just put simple numbers. Okay. Where is blank in all of my item here? Okay, nowhere is blank.
Is that place you created table?
Eh?
It is that portion you created table.
The portion I created table.
Yes.
The table you used for illustration.
Okay. Okay, no problem.
Yes.
Now, I need the value. The value at the modern trial balance that we did the other time, I put it at the value edge. He has given me the value of my asset, but this has not spoken well to what I needed. What else did I need? I need beyond this, break the asset down for me and liability in terms of current and non-current. Furthermore, it broke it down. It's making sense little by little. Okay, can you break down the current asset, non-current, everything into the class or financial statement line? I click on it again and bring it down. It broke it down for me. Okay, can you break down cash and cash equivalent and everything to me inventory? You go to the detail note line 1, break it down. Okay, is there still further groupings? I check. I still have 1 more grouping. Break it down. But this last grouping only affects items of PP. Now, this thing looks, yes, it's breaking it down, but it's not looking presentable. Therefore, what can I do? I come here to design. First, I check my layout. This is the layout I use for financial statement, tabular form. Can you see my layout? It's coming clearer now. Okay. Now, what else can I do? Go back to the design. I want to brand it in this color. I like this color a lot. It's coming out in better version. Okay, still come back to the design. I want to brand it in a way, and the subtotal, I don't want it to be on top, I want it to be below. Okay, now, he has given me something nice now. Now, let us now do something. All those ones that are blank, I can edit because it's not showing further breakdown. Okay. I only needed it much more for the personnel costs. Therefore, I hid it, and you can see how beautiful it is as we move on. Now, personnel is relevant for me. It broke it down. Operating costs, you didn't break it down. I don't need it. If I want to break my operating costs into utilities and etc., I can still do that. Okay, now it shows my balance sheet agrees if my grand total is 0. Otherwise, from here, I can tell you that I have problem with my trial balance or with my mapping. Okay, but here you can find that everything is normal. It shows is okay. Once I have it like this, I can close this. If I want to open it, I come back here to open it under the table analysis. I can bring it back here. But if I don't need it, because I want to expand it, I can take it off. Okay, now I can do something that all these sub balances or financial statement line, I can burden them so that I can see the total at a glance. Okay, from there, I saved it. Now, I produce my financial statements. But again, IFRS has its own template of how you present. Now, what will I do? Can we look up, please? What will I do? I come back to the template I've created. I start with my balance sheet. Do I have, can you check all what I can see here? Can you see all this? Can you see all this?
Yes,
Now,
we can.
yeah.
Yes, we can see formulas.
If you click PPE, what will you see? Can you read it? It told you where it's coming from now. Element, asset, grouping, non-current, PPE class. Okay, let me give you an example. I pre-created this one. If I decided to, let me do something. Let me try and update it. Since I've more or less unlinked the formula, it won't pick it from here. What I can do for you is to recreate it again. Now, what I will do is delete everything here and recreate it for you. And you see how it's been done. And all these are one-off setup. I'll come to income statement. I'll take them off. Sorry, my worksheet logged out. Although I believe it's saved.
Yeah, Mr. Muyiwa, but are there accounting packages, that are IFRS compliant, or even if one plugs in information, one will still have to do some tweaking to make it IFRS compliant? The Sage, all those big names we know for accounting packages.
Okay, I'm coming to that.
Okay.
Yeah. I'm coming to that. I'm trying to open what went off. Okay, I've tried to open it. Okay, let me quickly answer that question. Sage, Oracle, SAP, Microsoft Dynamics, and Co. are enterprise resource planning systems. You know what it means? They are not accounting package, they are business packages that allow end-to-end processing of transactions. It's like every activity of your processes, approval, and everything is done by a system so that it's end-to-end. And this is one of those things that will take away routines. Okay. Now, what happened is that the end product of all your routine and activities, operation, approval process will end up impacting the performance and financial position of the business. Which invariably what happened at that point in time is that is what end up impacting your trial balances. Okay. Now, those systems are not financial reporting systems, but they still create trial balance for you, and they create a form of balance sheet income statement for you as a report. But financial statement is more detailed than what they will produce. Today, you now have what we call financial reporting system, different from this processing system. All these Sage and Co are processors. Okay, they help you process daily transactions and events.
Yeah.
Now, what organizations do is that they now buy a midware where they are called financial reporting tools that will do the same thing I'm doing here, but you are still going to set it up the same way I'm setting it up for the first time. Once you now set it up, it will now be plugged directly to your trial balance. That when you compute the balance of each year or each day, it will just pick up. Instead of you spooling out your trial balance, it will spool it out and put it on the system you have set up the way I'm setting it up. And once you click a button, it generates your financial statements.
FS.
Okay. But the next question is this. Is it possible that you won't have to tweak anything at all? The answer is no. It will still generate 80 to 90%. But for example, if there's a new standard that requires new disclosure, you have to tweak it.
Yeah. Exactly.
Do you get what I'm saying now?
I get you.
Yes.
Which means what we are saying is that all this automation will solve 80, 90% of your process, which means we can't be handicapped now. Don't you want to do something? The only thing you do is like the 5 and 10% instead of doing 100%. Am I making sense, sir?
Very well.
Those reporting tools, they exist. Caseware is one. GOS Financial Reporter is one. You understand? But the question is that you still have to set it up the way we are setting it up, because system is a dummy. You are the one that knows your chart. You are the one that knows your line. You are the one that knows the final output you want to produce. Therefore, you will do the setup. Going forward, the system now recognizes that setup so that anytime you put trial balance in it, or you put trial balance itself, once you click button or prepare financial statement as at this date, you just collect information in 1 second. 2 to 10 seconds, you produce your financial statements. Now, you cannot generate it to Excel so that you cannot, it's from the Excel, you can do multiplication like additional notes or disclosure.
Yeah.
And 2, you will not necessarily prepare all your cash flow for you because cash flow requires some unique adjustments that are peculiar each year. Are you getting it now?
Yes.
But you know, cash flow is not accrual based. Therefore, it's a new convention. Therefore, you will still solve your cash flow information to highest degree. But that you will not do anything, you just produce and go and print and say this is your account. The answer is no, especially because standards are changing. Lines that you never had last year, you added this year. And you don't have it set up because you never predetermined it. What you have to do, you come back and set it up. But coming back to set it up will not take more than 2 minutes because it's just 1 or 2 lines. Or like we set up over 200 lines now, Abby. But going forward, your new lines cannot be more than 2, 3, 4, 5. Except if you are changing your line of business totally and you have to reset that system up. But you see what we are trying to do now. Okay, now I'm back at this. I don't know why. Why is it closing this? I don't know. What is wrong with that file? Anytime I want to open the system of changes in equity, it's closing it up. Two people are not here, or 3 people? Okay, 2. Can you call on them? Can somebody mute at the background? Okay. Let me share my screen as I was deleting the other time. In our trial balance, do we have finance cost? Or interest? Okay, we do have interest expense. Okay, let me try and do something. Let me convert one of the expense line to interest expense. That one, we are going to take it away from admin cost to finance cost. Okay. Now, when I come here, you'll find out that before we don't have interest expense within our expense line. Therefore, we are going to create it now. Automatically, it will surface as a line. Okay, how do you do that? You go to data, click data, and you go to refresh. That is a click of button we use going forward to prepare account. And you click on it, you click refresh all. When you refresh all, can you see finance cost came in? And that is it. Now let's prepare our account. And all what I'm still doing here is a setup. And I'll show you why it's a setup. Okay, I've not deleted this. Now, how do you set it up? Look up. Normally, I'm supposed to set it up by saying is equals to, I'll go to where I have PPE under asset column. Can you see asset here? And under non-current asset, I have PPE. What is the subtotal of PPE? It is 21984. I'll click OK. Investment property, I don't have that. Intangible asset, I think I have one. I'll come under intangible asset, the total. I click OK. Now, can you see it's writing a formula for you? It's telling you that you are taking it from a pivot trial balance, which resulted in a pivot financial statement, which shows that that item is an asset, which shows that it's a non-current asset, which shows that its FS line is known as property, plant, and equipment. The same thing for intangible. Deferred tax assets. Do I have deferred tax assets? I don't have deferred tax assets. Therefore, I'll put 0 there. Financial asset, do I have it? Investment in financial assets, I have it. Prepayment, I can change this to prepayment if I don't have deferred tax asset. Non-current portion, I have it. Inventory, trades and other receivables. Other assets, cash and cash equivalents. Share capital. I'll see that under equity. Now, share capital is showing negative because it's a credit balance. And we said anything that is negative is credit balance, Abi. But I'm not showing negative in my account. Therefore, in front of the get pivotal data, I'll put minus in it to convert it to positive because I'm presenting it in an account. Okay, retained earnings, what I have there is also negative because it's in credit balance. I put it in negative to convert it. Other component of equity, what I have there is negative. I put it so that I can come back to its position. Borrowings. Because it's credit balance, I put minus. I come under liabilities, non-current. Deferred tax liability. Provision is 0. The only provision I have is current. I go to current. My trade payable. My bank overdraft. My employee is 0. My current tax payable. And that's all. 1, 2, 3, 4. Are there 4 items? 1, 2, 3, 4, yeah. Now, if you look at your trial balance, did he agree? Can you answer? Can you unmute? Did he agree?
It's not. The tribal entity is not
Why
agree.
If you are following me, why didn't he agree? Remember, it agrees here because everything here is 0, which shows your asset and liabilities matches your equity position. Now, the reason why I did not agree is that we have not considered items of profit or loss. Therefore, let us go to profit or loss. Revenue. You know it's on credit balance, Abi, which will be negative. Therefore, I'll put minus in front in the setup. I'll come to revenue side, under income, 504. My cost of sales is debit and it's positive, but in presenting my account, I have to put it in negative. Therefore, I'll put minus in front. Cost of sales, you come under expenses, cost of sales. I have my gross profit. Now, because I'm presenting in order of function, I'm not going to consider this. I'll consider all of these ones inside notes. Okay, what I only have is administrative expenses. Is debit balance. Okay, I come here. My admin expenses as a total is this. Therefore, I have operating loss. I'll put everything as investment and other income. When I get to my note, I'll break it down. Because sometimes I might decide to put everything in financial statement, but if it starts to belabor the income statement, I can summarize it, and when you get to note, you break it down. Therefore, I'm doing that now. Because the credit balance is going to be negative, and I want it to be in positive here, I put negative there. And where's my income statement? Other income, 57,000. It reduces my loss. My finance cost is debit balance, it's positive. Therefore, I want to deduct it. I'll put negative in front. At the setup, this is my finance cost. Now, I've observed an error here. I'm having other income being classified among expense line. Therefore, what is the problem? Now, the beauty of this is that you can generate what we call a lead sheet or a supporting schedule, even for your auditors or for anybody or for yourself. Now, where I have the problem here I'll quickly go on it to click that, where is it from? It separates that item for me. And can you see, it generates a list sheet to tell me that this is the item that make up that. And when I check here, this is foreign exchange gain or loss. I classify it as expense, but in my financial statement, I put it as what? Income. Therefore, there's something wrong. Therefore, I need to go back and classify it as income, Abi?
Yes.
Therefore, I can come here. Again, you know, foreign exchange can be classified as administrative or other income. You understand? But you must follow it consistently because it's neither an expense nor an income. It's oscillate depending on how you are exposed to foreign currency. Therefore, I'll copy this code, go back to my trial balance here, search for it, and quickly go and correct for it. Therefore, I can come here to reclassify it as income. Once I do that, if you come back here, you know it is here before, Abi, and we'll put it as other operating expenses. Again, let me go back and correct for that. It shouldn't be that. I'll put it as FX gain. Do I have FX? Foreign exchange gain or loss. Okay. Now, if I come back here, you'll not see it here again. You'll now see it under income. Now, on a click of a button, I go to my data.
Sorry.
Refresh. Yeah.
Sorry, I think in the trial balance, that foreign exchange gain shows in debits, which implies that is an expense.
No, that's why I've explained something. I said, is either you take the policy as reporting it under income, whether it's a gain or loss, or reporting it under expense, whether it's a gain or loss. The implication is this. If you report it under expense, even if it's a gain, it's going to reduce your expense. If it's a loss, it's going to increase your expense. If you report it under income, if it's a gain, it's going to increase your income. If it's a loss, it's going to deplete your income. Okay. And this is also adjustment you can decide to do, that after you generate it out, you can use your Excel to manipulate it back to, if it's a loss, always put it under administrative expense. If it's a gain, always put it under other income. Or neutrally, you might create a line separately in your financial statement like this. I can neutrally come here under my income statement and say, anytime I have this, let me create it separately. I can do that for your sake. I'll still leave it as income, but I'm going to use it. FX. I'll just pick one of the items here. I can call it FX gains or what?
A loss.
A loss. And if it's what you have chosen consistently, you must do that. Therefore, what I'll do is that I'll come back to my chart here. And ensure that I create it as a separate line in my income statement. FX. Are you getting it?
Okay.
FX gains or what? Or loss. Losses. And you see the beauty of what I'm talking about. And it's good you ask that question. It has shown you the beauty of doing it in different ways, which then means that in that case, I'll come here to my trial balance and remap it. This is it, Abi. I'm still going to leave it under income, but instead of other income, I'll go to its own line, FX, so that it stands on its own, whether positive or negative. Okay, I'll come here. Now, you now see that it's going to leave here and come here on its own independently. Now, I'll go to data, just click refresh all. Now, can you see it here? FS gain or loss on its own. Now, which means regardless of whether gain or loss, I won't bother. I'll always come and show it separately. Now, this is in debit, which means it's a loss. I have to put it in negative when I come to my profit or loss. I'll come here. Okay, income tax is in debit. Therefore, I put it in negative in order to report it as a deduction. There are two income tax. One is current, the other one is what? Non-current. I add it together. And what I can do there is that instead of breaking it like this, I can further break it in this manner. Let me go back to my setup. In my setup, I have income tax here. Therefore, I can shift it one way. Instead of, I'll shift it like this to break it down further so that what I only have here should be, sorry, this way I'm supposed to shift. What I'm supposed to have here is just income tax. When I get here, I can bring this one out, put it here. I delete this, bring this one from here into here, and I can close that gap. And when I come here, I only have income tax as one item. And you see what I'll go and do now. What I'll simply do is this, I'll come back to my income tax item. Therefore, I'll go back here. It's just one income tax expense. I come here. Income tax. All these ones are this. Deferred. And I come here. Now, see the beauty of what I've done now. It will make my link in here very nice. I'll just come here, data, refresh all. Now, does it look better than before? See, the sum of income tax is this. Is this total? But he has broken it down into the current and deferred, and further break it down into CGT and etc. Which means it's a setup. The way you want it to come out and give you full details, you set it up like that. Therefore, I can come back here and do the needful and say, link my stuff here. Because it's an expense, I want to deduct it. Therefore, it comes here. My total income tax expense is 24. That is it. During the year, there's no information about evaluation gain or fair value gain. Okay? Therefore, I'll put 00 here and the tax effect. 00 and the tax effect. Now, this profit or loss will close out where? Who can remind me? What will it close out to?
Should go to retain.
Earnings.
Should go to retain earnings.
Now, this is a loss, Abi. Will it increase my retained earnings or reduce it?
To reduce it.
Therefore, I'll come to my retained earnings under my balance sheet. This is my retained earnings without considering the current year loss. Remember, because if you go back to this retained earnings, this 398, if you go back here, is as a result of what? 398 is as a result of retained earnings brought forward and the dividend deduction. Is that not?
Yes.
Yes, yes.
Therefore, which means it has not considered the retained earnings for the profit or loss for the what? For the year. Therefore, I come back here, I'll add to that plus profit or loss for the year. Don't go and add total comprehensive income, because if you have anything under evaluation surplus, they go to other comprehensive, other components of equity. It doesn't go to retained earnings. Therefore, if I do that, did my balance sheet agree?
Wow. It agrees.
Now, we are still coming there. We are just doing setup. We are doing setup. Okay. Now, we have something close to having financial statements. Okay. Now, this my section for OC is not, let me go and copy something out from another slide. So that I'll show you how you prepare your statement of changes in equity also. Okay, I brought this slide for you. Let me just hide this. Okay. Now, how do I prepare my statement of change equity? Now, again, I go to my capital. My capital has not changed. I go to my capital as at the beginning of the year. I go to my share premium, there's no share premium. I go to my retained what? Earnings. At the beginning of the year, it's not 383, it's 393, because as at that time you have not deducted dividend. You must take note of it. There is other component of equity. Two that are relevant, I'll leave it out. Others that are not relevant, I'll eat them. Nuruddin, have you seen the reason why I can't use your account? Because it's limited. You can't give the exposure you need. It's just going to give you answer.
Noted.
Okay. Okay. Now, evaluation reserve. I had it at the beginning. Where's my equity? I have my evaluation reserve at the beginning. I have my fair value reserve. Okay, I'm supposed to sum this up. Now, what have I done? The sum of this to this plus this total. Because what I've done is that I've more or less this. Let me just put it in this color. It's what make up the total here. Are you getting it now? It's too dark. Okay. Now, profit for the year. I link it up here. If I've add information, but in this year, I have no information about this. There's no transaction. No transaction. Therefore, there's no total. Okay. Now, dividend. Remember that there was dividend, Abby?
Yes.
Because it's a deduction, I put it in negative. I go back here. It has a debit balance. That's why it's showing positive. Therefore, now, what is my equity now? My equity is 247, Abby.
Yes.
At the end, it was 501 at the beginning. Now, let me check my balance sheet. What's my equity here?
247,212.
Does it break down? Ties to what I have here? Does it tie to this?
247,
and this? Does it tie? Does it tie? We didn't answer.
Is it the breakdown or the total we have is 247,212?
Okay, share capital. Okay, let me copy and paste now. This is my balance sheet.
Okay.
100, 319.
Yes, yes.
7. Yeah.
Yes, it ties.
All right, let me just cut it. Now, look at this side by side. Let me enlarge it.
687.
Can you see it here? 100, 100, 139,525, and component of equity 7687. Can you see that independently the two are correct, even though we pick them from different points? Okay,
Yes.
that is what we are trying to achieve. Okay, now that is that. Now let me now show you how beautiful it is. This is a one-off setup. Now let me go and generate another trial balance. Let me copy this information out. Let me copy this information out. Let me create one sheet. Let me just put it here. Or let me copy the entire trial balance out in case we tamper with it. Now, this is the trial balance, Abi. Now, let me show you something. I'll delete everything here. If I delete everything here, let's go to our account. Let me update it and see what it will show. And I will explain something further. Are you set? I don't have account again because I don't have trial balance. Now, let me now change the figures in those trial balance. Now, should I change it in multiples of what? Can somebody tell me multiples of what should I change these numbers? Should we multiply it by 2?
2.
By 2.
Okay, let me multiply it by 2. Everywhere you see blank, put 0. Because the product function I use, we assume 1 when you don't have any stuff there. Therefore, let me copy blank. Everywhere you see blank, put 0. Okay. Now, let me now copy and paste. Imagine that this is the trial balance for second year, and you want to prepare account, assuming that we don't have new lines. You will not even spend 5 seconds. Just copy the trial balance, come and paste it here. Or you do VLOOKUP. To VLOOKUP it, you're going to see it as we move on. Now, this is trial balance, Abi. This is the account. On a click of a button, refresh. Did our balance sheet agree?
Yes.
Where's our income statement? And where's our statement of changes in equity?
Okay.
Wow.
And the next level we are going to after break is to link it to notes to the financial statement. The same way it will populate everything.
How long will our break be?
Our break can be 15 minutes.
15. Wow.
15, yeah. And you can be chewing something and taking water as you are.
Yeah,
That's
I will
Okay,
be on the
sir.
road. I will be on the road.
why?
I want to leave where I am now to drop with something.
No.
You are in your comfort of your home, Abi.
You know,
How are they badminton?
I'm in my room.
they are supposed to do it yesterday, and Nuruddin said no, that people said they are comfortable today. Because yesterday was public holiday, because I've said it severally to Nuruddin that this is practical and must be there 100%.
Yeah.
This is not theory of IFRS says this, IFRS says that. No. This is demonstration, and it's essential. And I expect that either you are in office or to do it for network purposes, or you are at home 100%. But again, the beauty of it is that if you are not here, the only thing you might miss is for you to ask the question directly. But I believe your colleagues here can ask the question you need to ask. But the beauty of it is that you can always fall back to the recording.
No problem. No problem. Thank you very much, sir.
Okay. I think we can go on break now. And when we come back, we'll now continue by linking it to notes. And you will now see how we make use of adjustments.
This meeting is
Can you mute? We make use of adjustment. Like, for example, you want to do adjustments Auditor give you adjustment. You see how you post it in 1 or 2 minutes, and your account, you are returning to the auditor immediately. They can use the auditor adjustment. You see how you post it in 1. Can you mute?
Sorry, please.
Okay, we can go on our break and get back. Welcome back all. Okay, we are at the last phase of the session. Now, what we wanted to do now is to switch to a more comprehensive way of doing it. And I want to do 2018 and 2019 side by side. Now, what I'll do is that I've modified the trial balance a little. I'm going to just adopt, the information I have there. I have on the other side there, and bring it in here. Okay, let me copy the trial balance I have here. And put it here. Okay. Now what I've done, this is my balance. And therefore, I'll bring it here and copy and paste my this like the original trial balance, which we convert to a table. Now, I've extended the table. Okay, you find out that some items are not there because the formula I wrote there, I believe you know VLOOKUP. Okay. Now, I'm going to change it to 55, up to 55. That's why those 3 items were not there. Automatically, it updates. That's the beauty of a table. It updates. When you come down, you'll see that it has updated. Now, when I check my trial balance, it sums up to 0. Can you see it? Yeah. Now, what I'll do is that I won't reset up this again. I'll just copy and paste what we have done before. I'll come here to copy and paste this so that I don't replicate it again. Let me copy and paste it from this end to the other end there. Yeah. So that I can copy all those other items. I should have deleted it and put it. I hope this will not take some of my time. I believe it will respond on time. Let me try and undo it because it's taking too much time. Okay, let me just reopen it because it's taking my time. Okay, what I'll do again, Okay, I think I've saved this before. Yeah, I've saved this before. Okay, I think, okay, I've not updated this. I'll come back here. We'll copy it. We'll paste the trial balance. $155, yeah. So that it picks it to the last level. As I've said earlier, we all know about VLOOKUP. Okay. Now 2019, I already have this my stuff, but I don't want to use it again since I've created more layers. We don't want to restart it all over again. Therefore, let me try and delete it. I've deleted this. Let me see if I can delete this. I've deleted this. Okay. Okay, there's one remaining. I'm deleting this. Okay. Let me now go and copy from the other side. The one we did earlier. You can remember the one we did earlier is this, which I've copied now. Okay. And let me go and paste it. Let me paste it as value so that it won't delay me. I've pasted it as value. It's no longer drop down. Okay. But I would like it to be, let me try. Let me paste the value first and save it so that if it doesn't, let me save it first. Okay. I can come back and take it off and paste the other one. So that in case it's not, I can restart it and move on. Okay, now let me go back and copy that. Okay, I think I got the message clearly now. Therefore, it's okay for me now. Yeah, I got it right. Okay, now, what then do I want to do? Let me return my trial balance to what it was before. That's the original trial balance we had. Let me go back and copy that. Remember, we saved it somewhere here. And that returns us to our original position. Let's see whether it will change as usual. Now, it has brought us back to our original position. Okay. If that is the case, let me copy this figure and go to my new sheet. Now I put it here. Sorry, in the trial balance, because I've already linked it. I put it back here. Okay. Now, let us now create our, this is my 2018. Now, 2019, This same item we have here, let me copy and paste it. Okay, these are the two items I newly created. Let me bring forward our trial balance we had then. First, let me carry out a test. To know those items that are not in the other leg there, it will throw out new items that I've more or less created here that are not there. Was it taking time? Sorry, it's rotating. Something's wrong with the file, probably because it has too much of linking. Okay, it's back. As I've said earlier, I want to test items that are not in the former one. I believe you know Excel function, VLOOKUP. Wow. It's equals to okay. This is there. And remember that some, we have more or less changed the descriptions, especially for inventory, revenue, and etc. I'll test them simultaneously to show true or false. Now, you find out that this was not there before. Can you see it? This was not there before. We now have share premium. Remember, okay, we changed this to fair value reserve instead of IFRS. Yeah. I remember this one now, we have changed the sales also. All of these items are what I've confirmed now. Therefore, what will I do? That I want to create more lines. The most important are the ones that are not, that are new lines I've created. This line and these two lines. Okay, I've changed this to amortized cost. Therefore, the two lines I have here for this, I have to match them. Deferred tax income and expense, I have to match them. It's going to give me the results. Okay. Therefore, it will assist me here so that this line is new. I think the new lines I created are 2 in number. Yeah, this, no, 3, right of use of assets, share premium, and this. Therefore, those lines, I have to take care of them.
Impairment charge on receivables.
No, that one was there before.
But the test, okay.
What does the test show?
I thought it shows false before.
Where? Where is it? No,
Yeah.
No. The false is showing that we look at it. Is a slight change in the typing. This one now, can you see it's showing IMA pay, not impairment? That's just the first there. It's still the same line. Eh? This spelling is correct. This one is not correct. I corrected it here. That's why. Okay. I'm only interested in the 3 new lines I brought in. Okay. Okay. Now let me just copy the old lines. I'll copy and paste the old lines. Let me do it like this. Better way to copy. Okay. Those 3 lines will still show that there's nothing there. Okay. Those 2 lines are still showing. Now I can come back and pick some new lines I created here that are not in that line. Test. Therefore, AGO and cost of sales related party are not there. Okay, because this is cost of sales AGO. These are the two new lines that need correction. That is not there. Remember, we created these two, 75 and 250. Therefore, I'll go and create it here in 2019, 75 and 250. Under revenue. $7.5 and $2.50. Therefore, once I copy it there, it will bring it out. Okay. The other one is cost of sales. Is $2.50. Okay. Yeah. Under this, the cost of sales. Okay. I'm picking up the recovered version. Okay, I've recopied this. Now, therefore, everything is complete now. Therefore, I can return those items I have here. Right of use. This is right of use. It's a new line. This is share premium. And this is amortized cost ROU. Those are the new lines I've created. Okay. Now, these are the debit and credit item for the year. Let me go back here and pick my balances. Because I'm trying to recreate a neutral balance subsequent year. That's why I'm doing all this. So that I can be able to do comparative, as we have explained earlier. Was a new balance sheet figure for retained earnings, the one we did earlier. The balance sheet figure is 139. Okay. Okay. Now we are trying to create a neutral balance. This revenue, let me try and split it. Let me take 200 from here. I'll make this 600. Let me take another 200 here. I'll make this 400. And this will be 2. I'm trying to recreate a trial balance for the second year. Given that the first one was 2019, cost of sales, okay, I'll put 200 there, 180, which means I'll take 100 from here. This is 200, and I'll take 80 from here. This is 80. Inventory. Where's my stock? Okay, I think I make one. Inventory, PMS. Inventory AGO. And inventory inventory DPK. Okay, my opening trial balance agrees. What's my sum of debits and sum of credits? Sum of debit and credit did not agree. What's the difference? 60,000, okay? Now, $60,000. Okay, let me add it a little bit here. 4 and 20. Okay, the trial balance is in agreement now. Now, what I've just done here is to create additional trial balance for the subsequent year. Okay, now, is at this point we need to now continue our journey. All what we have been doing before is just to manipulate and produce subsequent year trial balance, which I've done. Now, what I would now likely do is to bring it forward to say, this trial balance now as updated of 2018 and 2019. Okay, I can bring it here. Okay, I'll delete all this so that we'll start all over from beginning. You'll see what I tried to do. Now, these are a new set of trial balance. And the same thing I'm going to delete here. Let me delete it one by one. You know, we have already set up our template. Okay, in the template we set up, take note that there are these items that are not there before. I'm going to take them out in order to manipulate it. I'll drop it here. Remember that we're going to bring it back. The other one is sales. I'll also take this out. And you're going to see what I want to do now. And the last one is cost of sales. All these are not what you do normally because I'm just manipulating them to produce a new set of trial balance. On that premise, what I'll do is to sort this. Okay. Now this is in tandem with the former trial balance. Therefore, what do I want to do? I'll just go and copy and paste what I have here in 2018 That's why I'm manipulating it. I don't want to start setup again. Just copy and paste all of this to this level. I'll come and do that to 2019. Remember the same way I did to 2018. Okay, now I can come back and create this and sort. I can bring this back now. Okay. There's something missing here. This 154 is now up to 155. There's something I'm supposed not to have cut off that I cut off. Let me check 2015. Okay, cost of sales was complete before. I shouldn't have taken that out. Okay. Cost of sales was complete. I shouldn't have taken it out. Therefore, I'll bring it in. Now, where's my cost of sales? Yeah, it was there before. Only that I renamed it. Okay, now I can compare Apple with Apple. Go back and copy in 2018, and bring it to 2019. Doing that, you find out that they paired. Now, the other portion I didn't pair, I can bring them in and sort. So that once I sort, I can go and now do the mapping. Sort. No. Which here did I copy? My detail line is supposed to be detail line 2, and that's okay. Okay, yeah. No, this is not there. Let me sort so that I can fit into where it's supposed to be. Okay, it's not giving me room to sort. If not, therefore I can break it. Asset retirement obligation is under, what code is it? 17800. 17800 should be after this, yeah. If I can quickly bring it up. $17,800. right of use, ROU assets. Okay, the next one is revenue. Okay, I copy it and paste. Now, what do I want to do? I'll just copy this and paste. This is revenue for AGO. Now, I hope I've not altered this order. I think something I've shifted. Intangible, yes. Cash, coin liabilities. Inventory. Okay. Other component of equity. Okay, something is wrong here. Okay, I've gotten it. Now, the share premium shifted the position. Share premium was not there before. Therefore, I need to create share premium. We don't have it. Let me just type it there. Share premium. So I'm coming to that. Let me paste everything as value, because it's not allowing me to manipulate further. The essence is that because I copy and paste, it's not the original sheet. Okay. Now I'll just pick some of those values here. Now, this is ROU, is a new class of assets. If you are familiar with IS1, that's IFRS 16. Let me delete all these drop-down lists and paste that expression. Clear all. Okay. Okay, I've cleared all now. Although I've already taught you how to create that link, what matters now? Okay, let me now fix all those new items we brought in. Right of use assets is not an intangible asset, it's a separate class. Right of use assets. Okay. What else did I bring in? I brought in share premium. I think this as share premium. What else did I brought in? I brought in sales, AGO. Sales, AGO. This DPK. And this is PMS, returns. Cost of sales, AGO DPK. Now, this amortized cost is an expense. We create the line separately, amortization. Now, what then do we want to do? Is that this is our chart which we have recreated for 2019. Now, and these are trial balance that more or less move from 2018 to 2019. Now, what then do we do? Look up, please. Can we look up? We are about to start now. You come back here and create the following. Last year, which is our prior year audited account, you come here, we are going to link our 2018. Can you remember this was our 2018? I'll link the balances here with 2019. Okay, you use VLOOKUP, and I always use if error so that it takes away error from the operation. I come to 2018, I link it up. These are my balances for 2018. Now, because it's Excel table, it automatically populates everything to the end. Okay. Okay. Now, we are in 2019. We need to close out items in 2018 to profit or loss. Now, what are the items? Yeah, remember that things you close to profit or loss are revenue, all income lines, and all expenses. Therefore, what do? You come out here and put is equals to minus everything in your income statement line. Oladimeji, are you with us, sir? And once I do that, I drag it down to the last item because everything from there are income statement line. Okay. Now, what happens? Dividend also is charged directly to retained earnings. I also say it's equals to minus. Now, all of these items affected retained earnings. Now, what will I do? I'll say equals to minus sum of this item and the whole of these other items, because all of them affected my retained earnings last year. When I do that, you'll find something interesting. What is interesting there? Is that my profit or loss for last year, after closure of my dividend. Let's go back to last year. What was my profit or loss? 243, Abi. What is my dividend? Dividend is what? 10. How many things affected retained earnings? 243 and 10. When you sum it together, what do you have? 253,845. That is what that represents. Yeah. 253,845. The essence is that my opening balance will have all income statement line to be zero, which means I'll now say sum up my opening with my closeout items. Sum up my opening with my what? Closeout items. Once you do that, you find out that every income statement line is zero. This is how your system converts your last year balance to opening. You find out that when you open your system for new year, all income statement line is zero because they have already been closed out to retain earnings. Okay, now what you are seeing here is similar to what you will have seen if you generate your trial balance. Freshly, see your trial balance. 0, and you can see your retained earnings is 139,525. If you come here to the one we just did now, retained earnings is now what? 139,529. I'm just trying to show you how your Sage, Power Enterprise, Peachtree, Oracle, SAP close out accounts. And this is at the setup point. Now, what is now new to us are debit and credit items for the year. Now, remember, these are trial balance. These are debit and credit items for 2019. Therefore, what I'll do is to link them into my standard templates. Remember, to link them is VLOOKUP. And once you have done this template before, you don't need anything again, just to update it. Okay, VLOOKUP, you pick the unique identifier, which is the account code. You go to the trial balance is put and link everything together. Now I want to pick debit. There are 4 spaces between 4 columns. Therefore, I pick my debit. It shows me all my debit items. I just copy it and paste it in the credits. Now, because it's picking from the same row, it's row 5, column 5 I want it to pick from. That's my credit line. Therefore, what is my unaudited balance now? Current year balance. This is my unaudited current year balance. Therefore, I can sum it up. It's made up of my opening, plus debit minus what? Credits. That gives me my new balances. When you sum this up, it is 0. It is what? 0 or true. Now, what then do I do? My account is ready. What you just do is that every year you copy your trial balance and you link it, and that is all. Now look at my account. I'll now come back here the same way we did the other time. I'll say insert, pivot, create a new table. I'll call that my FX. Pivot FX. I can say 2019 versus 2018 so that it can show comparative. Now, what do I need? Wait, there's something I didn't link. Let me delete it. It's not picking, I didn't pick all. It's not picking my GL lines, my financial statement lines. Okay, I've highlighted everything now. I pick this. You should pick it now. Can you see it has picked everything? Pivots, FX, 2019 versus 2018. Now, what do I need? I need my elements. And I need my audited balance. Okay, unaudited balance. Now, let me now tell you one secret. There's a secret to it. What is the secret? Is that if you go back to this trial balance, unaudited is not the final output. What is the final output? Your final output is your audited balance, which means I can create adjustments. I'll say audit debit adjustments. I can create audit credit adjustments. I cannot create audited closing balance. Now, what it means is that imagine that there's no audit adjustment yet. I'll just say this plus debit minus credit. Give me my audited balance. Now, let me come back to my pivot. Let me update it and see whether it's going to bring those things out. Can you see it? Is that it brought them out? Therefore, I don't need audited balance. Let me just pick, I don't need unaudited. I needed audited balance. Let me pick this so that anytime I pass audit adjustment, it reflects. Now, thereafter, I want it to give me the grouping, the way we did it the other time. Give me the class. Give me the details, note 1 and details note 2. Now, we are repeating what we did the other time. Remember, I told you, you come to your design. I like this color and this design. I create letter L and this. My layout, I use tabular form. From there, it's looking more beautiful. Come back to my design. I want subtotal beneath. And this is what I have. I can close this out. And what we did the other time, those ones that are not necessary, I take them out. You can expand, you can contrast. Now there's amortization reporting under income tax expense. We'll go and check that for correction. Okay. Now let's check for this correction. Amortization is reporting under income tax. That's wrong linking. Amortized costs. Go back to the trial balance. Yeah. Why is it reporting so? Okay, we made a mistake here. We didn't change this to category of administrative expenses. Okay. Now, I come back here. I update it. You see that it's corrected. It's no longer there. It has gone back to where it's supposed to be. Now, with what is here now, let's now come to our table. I have 2019 and 2018. See what I'll do? I always use if error. I didn't use it before. The essence of it is that if there's error, instead of it showing value sign and some other signs, it will just show me blank so that it doesn't make my work or my account look scattered. And therefore, if error is the new thing I'm adding to that. If you know about a Z function, you know what it means. It's allow you to more or less force an error to turn to something blank or to what you want, so that I can be able to address it later. Now I come back here, it is PPE. I come back to my subtotal of PPE. Okay. And if I prepare account in thousands, I'll just divide it by 1,000. But because I prepare everything to the full Naira, I just leave it at what it is. Okay. Or probably let me just put it in thousands so that I can appreciate it. I'll just divide it by thousands if we present it in thousands. Now it has come in thousands. Okay. Right of use of asset. I think I have intangible asset also. And I have investment, financial assets. I have investment in financial what? Assets. Okay. I have for intangible assets. Come back here. Intangible. I pick the total. Divided by 1,000. Now, the beauty of it is that I can come here. All items on this subtotal category, I want it to bold in the stuff. Yeah, let me come here. So that you bold it for me. So that I can easily trace it. Okay. Now, for financial assets, I come back here. That's the total divided by 1,000. Right of use assets. Inventory. Trade and other receivable. Cash and cash equivalents. Other assets. Other assets. Prepayment. I think there's prepayment. Just take these two prepayments. Okay. Share capital. Remember, I told you put minus because credit is on negative. Share premium. Retained earnings. You pick it after deducting dividend. That's why you link it together. There's a other component of equity. I think we have bank loan. And deferred tax liability. Liabilities. Deferred tax liability. Remember, all what we are doing is we are back to our initial setup. Trade and other payables. Current payables, current tax payables. We have bank overdrafts. And we have provisions. Let me just pick this as provisions. provisions. Okay, now if you check, the balance sheet is not in agreement, 820,633. Remember why? Because we are yet to do our income statements. Now let's do our income statement. Revenue has credit balance, therefore I put negative there to convert it. I come to my income section, I pick my revenue. Cost of sales is a debit balance, therefore it's in positive. I have to add negative to it to convert it. Administrative expenses. In this question, we do have selling and distribution. Other income. Is in negative, I have to show it in positive. Other income. And remember, we introduce FX gain or loss. Where's the FX gain or loss? Yeah. Finance cost. Is positive because it's debit balance. We'll put the negative sign. Income tax. You didn't pay minimum tax. It's normal income tax computation. That's why we are putting it under income tax. Let me eat this. Okay, we do have other comprehensive income item. That is that. Now, what do? Remember, this closeout profits, we have to close it out to our balance sheets. Remember, profit close out to balance sheets. And what we have is, this is 820, this is 793. You didn't agree. Let us go back to our pivot and see. Our pivot shows is 0. Why is it not in agreement? What item has been missed out in this? What is the difference first? Let's check. The difference is 27. Okay, let's check our costing here. $22. Okay, can you see? We didn't add bank overdraft. 68. Can you see? Now, let us go to our statement of changes in equity. Now, look up, please. This is going to flow from last year. When you check it, you see that it's flowing from last year. The only new things I'm going to put here are, let me open this first, like we did the other time. The template I gave to you is a complete template that has other items other than those that you have or that we have considered. Now, look up. Profit or loss for the year. It flows from your profit or loss. Can you see it here? My other comprehensive income items. Okay. Now remember, we don't have any new items here for now. Dividend. There's another dividend that is coming up for this current year. And dividend for this current year is 14. Where is it? Under retained earnings is 14. Okay. Sorry, every figure should be in thousands. I didn't divide it by 1,000. Okay, that's it. Now, what I want to do is that other balances will flow from last year. Okay. Now, let us now see what we'll do for 2018. Can you look up, please? Instead of replicate the same thing on 2018 at setup, what you do is just copy and paste. Just copy and paste, and I'll tell you what to do. But since it's a setup, you might decide not to do copy and paste. You might want to set it up yourself. But I'll tell you what I'm trying to do. Also here, copy and paste. Okay, Now, see what I will do. Go back to this pivot, FX. What I only have here is the audit close here, Abi. What then will I do is to go back to my data, go to my pivot analysis, bring out the feedback. I also need prior year balance, prior year audited. I'll bring it in side by side. If I want opening, I can also bring it in side by side. Now see what I want to do. I close it again. Wrap it so that it can take one page. Okay. I can see everything at a glance. Now, look at what I want to do. This is my prior year. This is my current year. This is my opening balance sheet. The difference between them is that my opening will not have any item for profit or loss because they are closed out. But my closing for prior year we have. And the essence is that I need both of them for what I wanted to do. And you see what I will do by manipulating. Okay, what do I want to do? Come and see what I've done here. I told you copy and paste, Abi. What did you have here?
Yes.
You have something showing that it's audited closing balance, Abi, which shows that it's speaking from this field. It's speaking from this field. But I want it to pick from this field. What I'll do is that I'll copy what is here. And when I do that, I come back here. Instead of showing audited, I'll show prior year. When I show prior year, remove the sum of. It shows me the one for last year. Now, instead of doing that, what I'll now do is that I'll just do like this and do copy and replace. I want to replace everywhere I have audit here. Everywhere I have audit here, I'll copy this audit here. Audit closing balance. I'll copy it here. Now, I'll now come here. You must highlight where I want it to change. Otherwise, if you don't highlight it, it will change from everywhere. Now, what would I do? I'll say replace all. It has replaced where it is. Now, can you see that there's no share premium last year? But there's share premium this year. Now, I'll go and do the same thing for my income statements. I highlight, Control H, replace all. Now, if you come back here, look up. My balance sheet is showing 80 here. What is wrong here? Okay. No. This one is showing this 2 times. Prior year, no. Because I've done it. Therefore, my balance sheet agrees. Okay, now I've done comparative. I can come back here to put the color back. I know where I picked the color from. Now, remember, this is setup. Now, where is this relevant? I can independently pick my opening balances. Instead of linking it to last year, I can pick it from here and say, if error, pick from here, my opening balances or my closing balances last year, which is my opening this year. Share capital was 100. Share premium was 0. Retained earnings evaluation reserve and fair value reserve. Now, this result is independent of what I have. Remember, I had additional paid-in capital in that year. How do I know? How do I know? Remember that if you compare this, my share capital is now 300 from 100. And my share premium is 100 from 0. If I generate this list sheet, you can see that there was 200 increments. Which that means that I can easily tell you that from that my investigation, it has shown, and I'll link it and say, at every point in time, my opening, my closing balance, what is my closing balance here? My closing balance here is different from my what? Opening what? Balance. Therefore, recognize that there's increase or decrease, which means it can be share purchase, a repurchased, or additional shares. And the same thing happens to this, which means this same thing, I can copy it. But what I'll now do is that I'll change share capital to share premium. Here is share capital. If you follow the program, and I'll just replace. It replaces to 100. Now, this has updated itself, okay? And I can easily come here and say sum of this, and what? This. And that gives me 693. If you come back to my balance sheet, what do I have? 693, the breakdown. And I can do that independently for year 2018. 2018, this is my 2018. My share capital was 100. There's no share premium, but I'll still link it. Retained earnings. Evaluation reserve. fair value reserve. The same thing we've done before, profit or loss. Dividend. Okay. 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 This 240, this 100. Seven. Okay. Yeah. Okay. Now, this line I picked was wrong. What I should pick is 393. This. Yeah, it's complete now. Now you can see the comparative. Sorry, I can't see video of others, please. Please, can we all put up the video? Now you can see the comparative. Let me hide other places that does not require items. Oladimeji is not with us. Now, this is it. We've built it completely. Okay, now can you see how we have built it from beginning to the end? Did you see it now? Now, that is our account. Now, let me now start to manipulate. Now, can you give me one audit adjustment you want us to pass? Let us say auditors classification and measurement adjustments. Now, pick your organization, for example. What are the kind of adjustments that your auditors are familiar with, or that you are familiar with your auditors?
Did you say reclassification or adjustments? I'm thinking of.
And you know, reclassification is like take something from this expense line to another expense line. That's one. Adjustment is that you post wrong figure or you didn't measure it well. Therefore, instead of 520, you wrote 52. I get what I'm saying now. The difference. You know the adjustment, various adjustments. Just tell me any of your adjustments.
I'm just thinking of the one that comes to mind is provision for bad debts.
And let us just pick some of the adjustments. Just tell me any adjustments.
Revenue overcast.
Okay, come there. Account code. Now, revenue overcast, Abby. Let me go to your GL line. Let me go to your GL line. Where is our revenue? Let's assume we overstate our revenue. Let me pick revenue of PMS.